Rinder, are we live now?
So we are live now.
Samriddhi, we can start. Sir, we can start.
Good morning, everyone, and a very, very warm welcome to the Fintech and Digital Payments 2021. This program is brought to you by ASSOCHAM India, and the theme of our today's program is Fintech for the Underserved, Future of Fintech and Payments to Drive Financial Inclusiveness. It's an award ceremony and conclave, and we thank you and welcome you to our today's program. Since the pandemic is going on, we hope everyone is keeping safe and well and following COVID appropriate behavior. Moving on, to start with our program, we are going to start with the inaugural ceremony, where we are very, very glad to have amongst us this morning Dr. Bhagwat Kishan Rao Karad, the Honorable Minister of State, Ministry of Finance, Government of India, who is also our chief guest at today's program. I'm going to start by inviting Shri Deepak Sood, who is Secretary General of ASSOCHAM, to deliver the opening remarks.
Thank you, Smriti. Thank you very much. Mantri Mahoday, Namaskar. बहुत धन्यवाद आप हमारे साथ जुड़े this morning. I am here to welcome you on behalf of ASSOCHAM and its large membership across India. Also, congratulatory note from our side for you to join and take this responsibility. We will work together with you on not only the fintech space, but the other areas of the financial space and taxation, and take our views and your views and take it forward as we go along, sir. I would also like to welcome our President, Vineet Agarwal ji, who is here with us, and Mr. Chandrasekhar, along with all eminent speakers and participants from the fintech world, the financial world of India. We have multiple sessions which they would be participating in. COVID has taught us multiple things. सबसे पहले तो हमको लॉकडाउन हो गए, इकोनॉमी को हिट हुआ, we came back, we were hit again, and but one thing that really structurally went very forward was how we learned, adapted to this new way of working, work from home, work from anywhere. And during this whole piece and period, economy did not stop. The robustness of the Indian economy, the banking systems, it really supported the whole activity. And looking at some of the numbers, one really feels that digitization, digital India is the way forward. And looking at some of the numbers, especially in this space, which India probably is the fastest growing market, from about $31 billion assessed value, it is now being looked at that it will close to 85 to $90 billion by 2025. In the last 5 years alone, 2,100 fintech entities have come up in this space. And therefore, this whole piece is going to be a game changer for the whole country per se. From my personal experience, Ready Wala, Choti Dukan Wala, Chai Wala, Badi Shop Wala, is all, and obviously fintech is not just about the payment gateway, it has multitudes of things. But what I'm trying to say is that it has enabled the common man on the street to transact. And it is building efficiency into the whole system. So therefore, it is something which helps a common man, which helps us become efficient. And the time that it takes for the banking system to proceed and process payments is gone. And obviously, the banking system is very strong. The ITES industry of India is very strong, and we can provide solutions to the world. We would also acknowledge here, sir, that as we work with the government of India, work with the governments of the states, the membership of India, we would like to work and work towards inclusive enabling digital ecosystem of this country. We would like to partner and ensure this transition from cash to cashless economy, which is more diverse and more inclusive, so to say. Just on last 2 points that I would like to say is this morning we will be releasing a report with our partner PwC, which has come through, and obviously I'm not going to touch much on that because it's something which they will speak about, and a lot of you from the sector should and will. We would also do awards here, sir, and we are very grateful that you have taken the time out to give these awards to those people. These are a platform that is created to share the success, the good stories, celebrate those success stories so they can be replicated, the innovations that have been done by companies. And with these words, thank you very much once again for all of you to join us this morning. Back to you, Smriti. Thank you.
Well, thank you very much, Mr. Sood, for those very quick remarks. I'm going to move on to our next speaker, Mr. Vineet Agarwal, who is the president of ASSOCHAM and the MD of the Transport Corporation of India Limited. Over to you, Mr. Agarwal.
Thank you, Samriddhi. Good morning, Honorable Minister of State, Minister of Finance, Dr. Bhagwat Kishan Rao Kararji, Mr. Chandrasekhar, eminent speakers, ladies and gentlemen. We are really thankful to the Minister to join us today. Sir, after you've taken charge, we are very sure that under your leadership, the Finance Ministry will go from strength to strength in creating financial inclusion, security, and growth for the economy. Deepak has already touched about the unprecedented impact of COVID-19 that has caused immense disruption, not only to our healthcare systems, but also to macro and microeconomic environments and the financial systems at a global scale. It is critical for us to hence focus on how financial resources are best used so that individuals and businesses can be safeguarded against further disruption and the growth cycle of the economy is not damaged. Today's topic, Fintech for the Underserved, Future of Fintech and Payments to Drive Financial Inclusion, is extremely important because it highlights the key role to digital financial services in achieving the vision of Honorable Prime Minister's vision to build a nation that is Atmanirbhar Bharat and a $5 trillion economy. This is possible only by robustness, functionally strong, and professionally managed banking, financial lending, and fintech companies. Technology has been a key enabler in the growth of the digital economy. Fintech has the potential to play a big role in increasing access to finance, growth of enterprises, be it small, micro, and medium entrepreneurs in the country. Fintech players are redefining the business models across different segments of financial industry, helping improve service delivery and contributing to digital financial inclusion. In the last few years, the kind of technology development that has happened in the area of fintech has just been phenomenal. In the last decade, the evolution of our country in the transaction journey has moved from physical to now multiple digital options. One clear result of this is that in 2020, the retail digital payments are now at 52% versus only 6% in financial year 14. And the issuance of checks, the physical checks that used to move, is down from 78% to 33%. This is a huge impact. Today, our country has perhaps leapfrogged a generation of this evolution and moved directly to Aadhaar and biometric-based payment mechanism. However, the biggest impact of this technology has been felt in creating digital framework for financial inclusion. Use of Aadhaar-based payment systems, that is UPI Bheem, for direct benefit transfers has greatly reduced inefficiencies, leakages, and cost for government programs. In the last financial year 2021, close to 100 crore beneficiaries received rupees 3 lakh crores directly into their bank accounts. This is a milestone for our country as the money is reaching the right person at the right time. The government transfers are not only making life simpler for the underserved, but also creating an ecosystem for P2P transactions. Sir, I'll share a small example of my company that hires trucks from the market. And we collaborated with banks to send payments directly to truck owners via UPI, thereby eliminating middlemen in this transaction. The truck drivers are now getting their dues full as well as on time and instantly. There are thousands of such case studies that are truly transformational. On behalf of ASSOCHAM, I congratulate the Government of India and the Reserve Bank of India for making concentrated efforts to promote financial inclusion as one of the most important national objectives of the country. With the launch of innovative products like e-rupee, our country is taking giant leaps towards financial inclusion as well as becoming a role model for the rest of the world. Sir, ASSOCHAM has been working very closely with the government on their vision to transform India into a digitally empowered society and knowledge economy. One of our 4 pillars is digitization and empowerment. And this particular event today covers that aspect very well. We look forward to working closely with the government in supporting all the new initiatives that you are taking. Thank you so much for your time. Thank you for joining us, and I wish you well. Jai Hind.
Thank you for talking to all of us, Mr. Vineet Agarwal. And it is time for us to now invite Mr. Vivek Belgavi, who is partner and leader FinTech with PwC India, who are also our knowledge partners for today's event, to talk more about the theme of our today's program and also release the report.
Thank you, Samriddhi. Honorable Minister, Secretary General, and President ASSOCHAM, and eminent industry leaders and panelists. It's a pleasure and privilege to be here. I would share a quick brief of the report we have developed, which we will launch during this event. It's a very important topic. I'm humble enough to admit that it's a topic which a couple of generations before me have worked on, and I'm sure a couple of generations after us will continue to work on, but it's a big problem that we are trying to solve, which is fintech for the underserved. So what we have tried to cover in the report has been identifying the gap areas, really learning from the recent innovations. What we heard earlier today, there is a lot of innovation happening in the market. What we have to identify is those common patterns, consolidate, and really drive it at scale. And I would also like to point out that we work across the globe, and it's my pride to share that the infrastructure that we have built in India, or the method that we have discovered, which is a public good digital infrastructure and allowing for a variety of private players to work on it, is very unique. It is our unique strength. We are very optimistic of exporting that thesis to all over the globe, but more importantly, try to solve the next generation problems coming in front of us over the next 5-10 years using a similar infrastructure. The report also talks about the trends and innovations, what are the strategies adopted, and finally, and most critically, we have tried to come up with some key recommendations, which are the direction where policy and the industry could work together to increase the penetration. As we look at the fintech segment, as Honorable Secretary General identified, it's a very diverse space. But to simplify it, we thought we will look at 4 broad business segments. Payments, which is the most intuitive, which is where you touch and feel, whether it's UPI, BHIM, a variety of PPI wallet apps, bank apps. We must admit that in last few years, and the infrastructure that got set up has helped us tide over some of the real harsh part of COVID, because the digital infrastructure was in place and payments played a huge role in that. Second space has been digital lending. In all the segments that we have studied, we have found the unmet credit equal to or more than the met credit in the ecosystem. And there's a variety of reasons why this credit doesn't get met. However, part of the COVID impact has been widespread digitization. A lot of digitization initiated by the government, but also a lot of digitization initiated by startups and the incumbents across industries, whether it is MSME, logistics, agri, education, you name it. We have never seen such widespread digitization happening in such small part of time. Now, that is very, very critical for the larger economy because it helps formalization of that economy. It generates a lot of data. It allows for a variety of players to make viable businesses out of it. So digitize and then monetize seems to be the mantra. The third area which has seen a lot of traction is neobanks, and there's a lot of myths or misinformation on what neobanks are. But I would put it in very simple terms. We have got millions and millions of bank accounts. What we really need now is activity in those accounts. Now, the activity drivers would be the purpose for money. So moving money is not the business. Helping money solve the specific problems, whether to get an insurance, whether to get a credit, whether to pay for a certain services, whether to pay for your employees. Now, those needs are most critical. What the new banks are trying to do is build on top of the existing regulated entities, but really build experiences which are intuitive, which are very specific to that consumer or consumer set, and hence drive activation. Lastly, but most critically, and this is where we hope a fair bit of innovation will happen on the regulatory side, is traditionally we have seen financial services and non-financial services as two very distinct entities. But as we have seen with the new trend happening globally, especially in Southeast Asia in particular, you're realizing that a lot of non-financial services players, whether they are in the commerce segment or social segment, they do have access to a lot of information and engagement with customers. How do we co-opt them in the financial services space? And definitely with right amount of regulation is very critical. So co-opting the non-financial services players who have, whether they are the ride sharing, whether it is social commerce, whether it is social networks, whether it's education, as their reach increases, they need not become banks, but how can they become easy last mile distribution channels by partnering with the banks, insurance, mutual funds is a problem that we have to solve right now. If we do, I do see a next huge quantum jump of digital transactions happening in this country. Lastly, I'll just highlight some flavors of the policy recommendations, the direction that we have been thinking about. The first, which bringing on to that point, partnerships is the key. We have to start nuancing between manufacturers and distributors and really make comfortable for distributors to distribute, because so much of the information is now digital. Which also brings me to the point that there are regulatory friction points to this whole journey. And which is rightly so. We need friction because it helps us in managing risk. But at the same time, the friction which stops providing us those services should be tackled with. KYC being one example. There are a lot of nuances on what a manufacturer, which is a bank or insurer, has to do versus what a distributor has to do. If the clarity comes in, which allows for more distributors to play and take on roles which the manufacturers can give them, enable them to do it without really parting away with their accountability, will allow for distributors to distribute it very quickly, whether it's an FD kind of a product or a gold kind of a product or a protection kind of a product or a credit kind of a product. The third bucket we want to touch upon is really incentivization. I think we've tried to encourage a lot of digital payments at the last mile. We must applaud all the initiatives taken by policy bodies and industry across the board. But we also feel now the time has come for allowing for that channel to discover its own profitability, for it to define its own pricing. Unless we get all the players in the ecosystem to become viable, we will not be able to achieve our end goal of inclusion with economic growth. Lastly, customer protection is the key. I must admit that none of the fintechs that I've come across with are really fly by the night operators. All of them are regulated entities. All of them are serious about building their business. We have to expand our thought process on the customer protection, because we are in this world now where a customer, when he takes a service, could be a credit or could be a payment transaction, more than one entities would be involved in the entire value chain. Now, technology allows us to increase our governance across the value chain, but we have to evolve our policy and not just hold only one party in the whole value chain responsible. That's the other dimension where we'll have to keep on evolving. That's all I have from my side. The rest of the details are in the report. Happy to engage with the entire industry on any comments, feedback. It is our country, it is our business, these are our people. Whatever best we can do in our generation to take it to the next level and pass it to the next generation, we should. Back to you, Samriddhi.
Well, thank you very much, Vivek. Rightly said, and we thank you for talking to us and throwing light on the report. I'm going to move on to our next speaker, which is Mr. Nikhil Sahani, who is Divisional President with MasterCard South Asia, and invite him to talk to our audience now.
Samriddhi, good morning, everyone. Honorable Minister, Dr. Karad, Mr. Shekhar, our former Secretary, colleagues from the
Nikhil, your voice is very feeble.
Is it better now? Is it better?
Yes, that's much better, please. Thank you.
Much better. Thank you. So, just saying all members from the industry and dignitaries, so delighted to be part of this important discussion on fintech payments and their role in driving financial inclusiveness. So, acceleration of digital financial inclusion for the underserved sections of the Indian society, of course, all of us understand is crucial. In fact, Honorable Minister Sir also reiterated this during the 7 years of the successful implementation of the Prime Minister and Pradhan Mantri Jan Dhan Yojana, that financial inclusion is amongst the topmost priorities of the Government of India, as it is an enabler for inclusive growth. I applaud the Government of India's initiatives and efforts in successfully embedding inclusivity in financial services by design, making it much more people-centric, including the financially unserved and the underserved. The RBI's Financial Inclusion Index indicates a 24% improvement in financial inclusion across 2017 to 2021, which is a very, very significant growth number. Initiatives such as the JAM Trinity, which have been acknowledged globally as game changers, have further ensured equal and affordable access to financial services for India's unbanked and underbanked population, thereby potentially reducing income inequality. Impact of digital payments in the direct benefit transfers can be determined from the fact that during 2021, 5.5 lakh crores were transferred digitally across 300 government schemes spread across 50 ministries. These are like really mind-boggling numbers. Making payments digitally at a certain point in time was considered to be an aspiration. Today, it's actually a given. And in the last financial year, as most of my colleagues here would be aware, the volume of paper-based instruments like checks has fallen by nearly 35%. Value-wise, the drop is about 28%. And small ticket payments via the Bhim Aadhaar Pay have increased by 92% over the previous year. So clearly, financial inclusion as well as digital payments is kind of coming of age in our country, although there's much more that needs to be done. To that extent, the Honorable Finance Minister also earmarked 1,500 crores in the budget in February for the promotion of digital payments. The Honorable Prime Minister had unveiled last year in August a vision to connect 6 lakh villages with optical fiber cable over the next 3 years. In fact, also the Honorable Prime Minister had announced the PM Vani to provide public access Wi-Fi points across the country. These are steps which will ensure, because today, the mobile phone is going to be the way you will get through and achieve financial inclusion. Many other initiatives, someone spoke about e-rupee, CBDC, ONDC, etc. These have been landmark achievements, as well as, the Honorable Finance Minister's recent decision to strengthen the digital agenda of customer-centric, tech-enabled, and collaborative banking through initiatives announced under EASE 4.0 will further enable clean and smart banking in the country. Most of these initiatives are significantly laudable. 72% of financial transactions of public sector banks today are done through digital channels. Active customers on digital channels have more than doubled from 3.4 crores in FY 19-20 to 7.6 crores in 2021. Fintech is potentially something which can kind of continue this growth momentum, as well as ensure a whole lot of other things happen. Most of you would be aware, it was a proud moment for India that we overtook China for the first time since 2013 in venture capital funding. And fintechs are a significant part of this venture capital funding which is coming into. I think a conducive integrated ecosystem that enables interoperability of products and services across platforms so that people and businesses can make payments across devices seamlessly is a must. And I think most important is that we have to get the entire ecosystem, whether it is the microfinance institutions, whether it is the MSMEs, whether it is the corporates, everyone has to come together to get financial inclusion to move. At MasterCard, our investment in financial inclusion is a part of a wider commitment to society, and our contribution is part of a global plan to convert nearly 1 billion people, including 50 million small businesses, 25 million women entrepreneurs, to digital payments. We've actually extended about 250 crore rupees as a commitment over 5 years to the MSME segment. As per the National Sample Survey, we have about 63 million MSMEs in the country, and 99% of them are micro enterprises. Yet they contributed 30% to GDP, 48% to exports, and employ about 110 million workers. So there's a whole lot that one needs to do. And from our perspective, we look at financial inclusion as an enabler, and from a philanthropic intervention perspective also, whilst Mr. Sood mentioned about how COVID has change the entire behavior. But from a digital payments perspective, I think at MasterCard, we believe, in being a force for good. Earlier this year, when the nation was facing, the disastrous second wave, which, none of us want to, kind of allude to, as it was one of the worst, worst parts to hit India ever. We joined hands with the principal scientific advisor to the government of India to provide 2,000 beds and also enabling in the purchase of oxygen concentrators. Honorable Minister, sir, you'd be interested to note this was an overall contribution of 75 crores for 2,000 beds of mobile hospitals, and 500 of these beds are constructed in the state of Maharashtra. Of course, the Center for Inclusive Growth is supporting the Digital ASSOCHAM project with an aim to educate and train 300,000 MSMEs and entrepreneurs over the next 3 years, enable them to integrate into the digital economy. There have been many such partnerships that we are talking about, but as I said, fintech is the way to go. And we at MasterCard will continue to work with the fintech ecosystem as well as the government of India to build a vibrant digital ecosystem in the country. Yesterday, there was a landmark announcement on card on file tokenization by the regulator. And we believe most of these initiatives that have been taken jointly by the regulator as well as the government of India will enable us in achieving the Digital India vision that has been enumerated by our Honorable Prime Minister. Thank you.
Well, thank you very much, Mr. Sahni. Before I move on to our next speaker, I'd like to request our other speakers to kindly keep it very precise, just keeping the time in mind. So I'm now going to invite Mr. V.R. Govindarajan, who is CEO and co-founder at Perfios, and request you to please present your address.
Thank you. Good morning. It's a pleasure to be here, sharing the stage with the Honorable Minister and other eminent speakers. So the theme for the session is most appropriately timed. As the country is recovering from huge social, health, and financial impact of COVID, it's important that the most vulnerable sections of the society at the bottom of the pyramid, as they are called, are brought to the normal mode at the earliest, so that the overall progress and recovery of the country can happen immediately. So financial inclusion becomes even more critical and urgent in these times. So in a way, as Vivek touched upon in his talk, challenges posed by COVID and other various constraints that we saw in wave 1 and wave 2 has actually helped in accelerating various policies and frameworks for digital transformation, which helps directly in fast tracking some of this inclusion. And we have seen it in our business directly. We work with practically all the lenders in the country. While the impact of the first lockdown was tremendous, significant drop in business. Whereas in wave 2, while the health impact was far more severe, the business impact was not that much, largely because of a lot of digital channels, digital transformation have been done in the last 1 year by various financial institutions and various channels. So to that extent, there was a significant continuity of business that happened. So traditionally, what are the challenges that we see for bringing this bottom of the pyramid to the mainstream? So what we find is, based on our experience, most of the products, most of the solutions provided by financial institutions have a cost structure built in that makes it almost impossible for them to take it to this section of the society. Small ticket size transactions, very little documentation that are available, whether it is KYC documentation or financial documentation. Most won't have credit history. Both physical reach and technology reach is extremely difficult. So as a result, a lot of these financial institutions skip this section of the society. So they're not able to take advantage of some of these services and products that all of us take for granted. Fortunately, a lot of ecosystem development, policy changes, physical and tech infrastructure developments, public service goods development, all have been fast-tracked in the last few years, in some cases because of the COVID. For example, with the CHAM Trinity that the speaker talked about, practically the entire population has been brought to a state where there are various documentation available, both physically and digitally, Aadhaar, Jan Dhan accounts, mobile number, and the reach through all of that. Added to this, regulatory changes for easy KYC verifications, digital KYC, video KYC. So all of these address one of the problems of onboarding customers. And added to this, a lot of companies like Perfios have leveraged the technology in addition to these policy changes so that we are able to easily onboard customers at the point of engagement rather than asking them to come to the premises of the financial institutions. So this is a great end user experience, which results in onboarding of customers quickly, saving time and effort for them. And one has to appreciate the fact that time and effort is significant for this bottom of the pyramid folks. They cannot afford to lose a day's wage by going to a bank to open an account or to do transactions. So this onboarding stuff has really, really helped. The other thing is, while a lot of progress has been made in opening bank accounts, as Vivek mentioned, one of the things that's important is in addition to opening bank accounts, there has to be transaction, whether it is in terms of providing access to formal credit or providing insurance kind of a products or other kind of products and solutions. All this became important, and that is when we can claim the financial inclusion is working well. And this is where I think the last few years of huge data revolution in the country is playing a huge, huge role. So with the mobile revolution, what has happened is we have one of the cheapest data access plans in the world. As a result, people have access to information now. People generate data on an ongoing basis, humongous amount of data. And this data can be used for a variety of applications. It is being used today, whether it is for establishing the identity, whether it is for credit processing or assessing the financial status, constructing a social graph. The possibilities are endless with the amount of data that we have and that data we continue to generate. So as a result, all this data that is being generated act as alternate sources, either for verification or for bringing all this set of people who have never been in the mainstream now into the mainstream. So what was not possible a few years back or even a couple of years back is a reality today. And data is the key in ensuring the faster rollout of these initiatives. So our vision is that small borrowers, I mean, taking lending as an example, small borrowers whose only collateral is their data should get the same respect and treatment from lenders as large borrowers with huge balance sheets. And with large amount of data that is being generated and enabling technologies, it is starting to happen. Obviously, with large amount of data, the privacy becomes a key factor. The Citizens Charter. That is where the PDP bill becomes important, and we have to ensure that the privacy is protected. And here, one of the initiative of the regulator RBI, account aggregator, is a fantastic initiative. Because what happens is the account aggregator acts as a great consent mechanism to get all this data without friction from end users, while at the same time preserving the privacy of end users. So as a result, now with a regulator-blessed framework like an AA, one is able to get any kind of data from an end user, and at the same time giving comfort to the end user saying, your data is preserved, protected, safeguarded, and it is not going to be misused. And a lot of applications on top of the AA frameworks, whether it is Open, LSP, etc., are all steps in this direction of a larger financial inclusion, providing formal credit to folks that were not available earlier. And other public good infrastructure development, Aadhaar, UPI, GST, DigiLocker, all of these go a long way in bringing people into the mainstream. And then finally, the emergence of fintechs. People have touched upon this earlier. This has been great development in driving the inclusion. So as I mentioned earlier, both the cost structure and the lack of difficulty in reaching the segment makes it difficult for larger financial institutions to provide these services. Whereas what has happened with fintechs USP is largely technology, leveraging technology, providing great user experience at a low cost structure and in real time. So once they are able to provide these solutions, provide the small ticket items, they are able to partner with the banks and ensuring that this segment of the society have access to the same set of products and services that all of us take for granted. And for the banks also, this is a win-win situation because they're able to, with their structure on their own, they cannot do it. Now with the fintech as a partner, they're able to provide these services, reach to a much larger segment that they would not have done before. And at the same time, all of this helps in increasing the overall financial inclusion. So fintech evolution and explosion is a great development that is helping this goal immensely. So while a lot of things are work in progress and we need to achieve a lot more, these are exciting times. Combination of positive policy changes, technology-based infrastructure at scale, explosion of fintechs that leverage emerging technologies, overall push and adoption of digital transformation journeys, all are contributing significantly to overcome the barriers that we face traditionally and bring a large segment of population that was not earlier in the mainstream. And on top of all of this is the biggest advantage we have, a data-rich economy with huge amount of data generated by everyone at all levels that is being leveraged to provide these services efficiently. So data is a great enabler for all these activities. So exciting times ahead. On this optimistic note, let me stop. Thanks again for the opportunity to address this august audience. Thank you.
Thank you very much, Mr. Govindarajan, for talking to all of us here. And in the interest of time, I'm going to quickly move on to our next speaker, Mr. Manoj Adlakha, who is here amongst us this morning, representing the American Express Banking Corporation India. Over to you, Mr. Adlakha.
Thank you, Samriddhi, and I'll try and keep it short. Good morning, Honorable Minister. Good morning, everybody. I want to thank ASSOCHAM for taking this initiative and organizing the second edition of the annual Fintech Digital Payments and Awards Conclave. I do want to share an interesting anecdote that, there is a centenary year that is being celebrated by ASSOCHAM, and it just so happens that 2020 is also the 100th year of American Express in India. 2021 is when we started, our travel operations in India. Through this journey, we have facilitated transparent and secure payment mechanisms throughout the country and continue to support the digitization of the economy. A lot of speakers prior to me have spoken about the fact that there is a huge potential for growth. So I'll not again talk about it, but everyone's talking about there is $1 trillion of commerce that is being transacted annually. We believe that as a country, we are strongly poised to capitalize on the India opportunity as millions and millions of customers in India go digital. Pandemic has only increased, and Mr. Suri mentioned that, has accelerated this journey. Consumers today are more inclined towards adopting contactless and touchless digital payments. Looking closely at American Express alone, when we see at what happened at Express, in 2021, we've had 75 to 80% of all our transactions online. When I compare that same with 2019, that number was about 50%. So there has been a strong movement towards online transaction. While it's exciting to witness, technology bringing about huge transformation in the economy, one of the concerns, and again, one of the esteemed panelists spoke before me, was around security. And I think it's a very, very valid concern. So in our case,
Manoj, we lost you, so maybe you want to turn off your video and. Okay, Smriti, let's go to the next speaker, please, as Manoj comes back.
Sure. So I'll request in the meantime, Mr. Jeremy Stochu, who's the Vice President, Government Engagement, Asia Pacific with Visa, to talk to all of us.
Thank you very much, Samriddhi, and thank you to ASSOCHAM for bringing us all together for this important event. On behalf of Visa, I'd like to express our sincere congratulations to Honorable Minister Karad for assuming the role of Minister of State for Finance. We wish you much success in your esteemed leadership position. Today's distinguished speakers have already given us much to consider. So whether it's PwC highlighting the tremendous opportunity for digitization, along with the attendant needs of security and risk management, Perfios talking about challenges with onboarding, MasterCard, massive opportunity in government services, and as you heard our colleague just now from American Express, talking about changes in consumer behavior toward contactless and other form factors. What I'd like to do in the brief time remaining, because I'm mindful that we're about to get to the part that we're all here for, which is the awards, really looking forward to that. I'll just highlight one feature on fintech and innovation, if I may. As has already been observed, India is at the cusp of a second, what we would say is a second digital payments revolution. All the milestones we've listed and we've observed are worthy, but they should be more of a foundation for us to go farther moving forward. And we think one of the ways that can be done is by continuing to cultivate an environment that is conducive to innovation. And in that regard, we see lots of progress and potential for additional partnership between the public and the private sectors. And we're keen to help support, nurture, and grow that ecosystem. So Visa has a number of initiatives like many other large networks you would expect. We have something called the Visa Everywhere Initiative, where we've partnered with 260 fintechs in India. And many of these fintechs are focused on transforming the value chain for essential everyday services, things like the delivery of milk and newspapers, assistance to small businesses or schooling centers. And also, we're obviously still focused on finding ways to cover that critical last mile and digitize payments in rural areas. And in that regard, we do a lot of work with all of those partners, but it's worth highlighting two steps that the Reserve Bank as regulator has taken recently to help further enable that ecosystem. One is the regulatory sandbox, and this is an approach that gives regulators a firsthand look at new technology before it hits the market. And at the same time, it has the potential to lower the approval and compliance burden for fledgling ideas that have yet to realize commercial returns. Colleagues alluded to some of the challenges that fintechs face. So in this way, we see a sandbox as both encouraging innovation and managing future risk through close collaboration so that we have a responsible approach to finding new solutions. Some of the fintechs that Visa has worked with in this area include YusPay and YuvaPay. Now, the second area where we've seen recent additional partnership is in the RBI's newly established Innovation Hub, which is aiming to recast and simplify the cross-border payment space, as well as make all payments more accessible and affordable. And in parallel with those two platforms and opportunities to work together with government, Visa in general is striving to provide fintechs with streamlined access to developer-friendly paths for rapid prototype building, testing, and launching of new card offerings. I'll just give you two examples. One is a fintech called Open, which offers a business banking service for startups. They've partnered to offer a business credit card, payment gateway acquiring, and real-time payments. And another is called Simple, and this uses what are called installment capabilities. In other markets that you've heard it termed buy now, pay later. It's a new evolving product, obviously has a different approach to credit, but it has a good use case for certain populations, and Visa is working with Simple and merchants and financial institutions to simplify the experience so customers can buy with just one tap through their mobile devices. So just in summary, I don't want to drag on. I know we're about ready to get to, hopefully my American Express colleague can come back and then we'll get to the awards. But I just want to say that Visa is really embracing the opportunities that the government of India has presented, which are fostering innumerable partnerships. And to be sure, there are several issues that remain that we need to work on solving together, things like security, privacy, and fraud. And there's always room to simplify and improve user experiences. And in that regard, I would be remiss if I didn't call out the latest development, which I understand was made public last night, an additional authorization for card on file tokenization. We think that that can go very far in helping to enable the overall ecosystem, higher levels of security and customer convenience. So we're grateful for that. And in conclusion, we're keen to tackle and solve challenges together, growing and learning from one another as we drive even greater levels of digital development across the country. And in that respect, today's awards recognize great strides that are being made moving in the right direction. And we are grateful for the opportunity to contribute to this worthy effort. Thank you.
Thank you very much, Jeremy, for
Samriddhi,
talking to us. Yeah.
Has Manoj joined back? Haji, karo. Let's start.
Samriddhi, can we do the awards first? And because
Sure.
the Honorable Minister has to leave by 10:40, so we can hear his speech and then we can continue with the program.
Sure. For all of our audiences, in the interest of time, we'd like to make a few amends to the schedule. We are going to now carry out the award ceremony, which is of the FinTech and Digital Payments 2021. And I'm going to ask my colleagues to show the slides as I announce the winners. So I'm going to start with the first category. The first category, ladies and gentlemen, is Excellence in Payments Processor Startup. And the winner of this category is NovoPay Solutions Private Limited. Let's all give them an applause, and many congratulations to our first winner, NovoPay Solutions Private Limited. Moving on, our next category is Excellence in Payments Processor Startup, and the winner here is Cashfree. The winner of Excellence in Payments Processor Startup is Cashfree. Moving on to the next category, which is Excellence in Payments Processor Incumbent, and here the winner is PayU Payments Private Limited. Let's all give them a round of applause. PayU Payments Private Limited. Next, we move on to our next category, which is Excellence in Payments Acquirer Startup. And here the winner is Pay Nearby. Pay Nearby is the next winner for Excellence in Payments Acquirer Startup. Let's give them a round of applause and move on to our next category, Excellence in Payments Acquirer Incumbent. And Fino Payments Bank here is the winner of this category. With a round of applause, we congratulate Fino Payments Bank. The next category is Excellence in Payments Acquirer Incumbent, and Lyra Network Private Limited has emerged a winner here in this category of Excellence in Payments Acquirer Incumbent. Now the next one is Excellence in Payments Issuer category, and here Paytm Payments Bank Limited FastTags is the winner. Paytm Payments Bank Limited FastTags winning in the Excellence in Payments Issuer category. Excellence in Insurtech Startup, and here ACCO General Insurance is the winner. With a round of applause, we congratulate ACCO General Insurance. Excellence in Insurtech Startup is our next category, and PhonePe clearly emerges the winner in this category. PhonePe winning in the Excellence in Insurtech Startup category. Moving on, Excellence in Wealth Tech Startup, and the winner is FinZoom Investment Advisors Private Limited in Wealth. FinZoom Investment Advisors Private Limited winning in the Excellence in Wealth Tech Startup category. Now moving on to our next category, Excellence in Wealth Tech Startup, and Vested Finance is our winner here of this category. Vested Finance winning in the Excellence in Wealth Tech Startup category. Now from that, we move on to our next category, which is Excellence in Lending, and EpiMoney Private Limited FlexiLoans.com is the winner of this category. Let's all give them a huge round of applause. EpiMoney Private Limited FlexiLoans.com. Now the next one is Excellence in Lending, and Perfius Software Solutions Private Limited winning in this category. Perfius Software Solutions Private Limited. The next category is Excellence in Neobanking, and Open Financial Technologies Private Limited is the winner of this category. The next winner is Spice Money Limited, and the category is Excellence in Neobanking once again. Spice Money Limited winning for Excellence in Neobanking. Early Stage FinTech, 0 to 3 years, is our next category, and Rupify Technology Solutions Private Limited is the winner of this category. Moving on to our next category, which is Early Stage FinTech, 0 to 3 years, RappiPay FinTech Private Limited is a winner in this category. And now the final award for Impactful FinTech Government Program, and the winner everybody here, is NCMC jointly applied by CDAC, BEL, NPCI, and SBI. A huge round of applause for all of our winners here today. Our heartiest congratulations to all of you. And with that, I'm going to now quickly invite our chief guest, Dr. Bhagwat Kishan Rao Karad, the Honorable Minister of State, Ministry of Finance, Government of India, who is amongst us today. He's our chief guest, to kindly address the gathering.
Honorable Minister, your mic is muted. If you can unmute yourself, please.
On the occasion of organizing webinar on fintech and digitalization, I congratulate Mr. ASSOCHAM, particularly Chairman of this ASEAN, Mr. Varun Agrawalji, Secretary, Mr. Deepak Sood, Mr. Chandrasekhar, and the different speakers, Mr. Nikhil Sahani, Mr. Govind Rajan, Mr. Manoj, Mr. Jeremy, and Vivek Bilgavi, Mr. Chandrasekhar, Srimati Goel, and friends. I also congratulate the different award winners who have received different awards in this field. As we all know, Honorable Prime Minister Sri Narendra Modi ji and Honorable Srimati Nirmala Sitharaman ji, they are trying very hard, and different reforms are coming in this field to achieve the digitalization. And due to these different reforms, India has been ranked #1 in the terms of digital transaction. It has crossed around 25 billion digitalizations. Now I want to say, in the pandemic year, this year, it was actually challenge to everybody, but this now we have changed into the opportunity. We must now learn and support the digital transactions around us. Modern finance fintech technology can be the new and the most powerful tool to increase the financial inclusion. Financial inclusion also played an important role during the pandemic for the government. It was the prime means of distributing around 1.70 lakh crore direct benefit transfers to 800 million people under the Prime Minister PM Garib Kalyan Yojana. The fintech sector has managed to grow even during the tough times of pandemic. This growth will help India serve those who were unfortunately underserved. I must also say that this is just the start. The growth in digital platform is expected to increase even more. India is a leader in adopting financial technology among emerging markets. It has also adoption rate up to 87% in March 2020 as compared to the 64% global average. In 2019, India's fintech market was valued at rupees 1,920 billion. By 2025, it is expected to grow into rupees 6,207 billion market. Skilled workforce and technological environment in India make it a great destination to develop financial technology. The government is also taking various steps to promote fintech. In 2016, under the leadership of our Honorable Prime Minister, it launched the Bhim app, a mobile payment app for digital payments. This will also help us increase financial inclusion by building on the success of opening 41.75 crore accounts under the PM Jan Dhan Yojana. India provides a great ecosystem for the fintech development. We offer formal identification like Aadhaar, access to banks under the PM Jan Dhan Yojana, scalable platforms like UPI, Justin and DigiLocker. After COVID-19, more and more people and companies are paying digitally. This has also motivated companies to innovate, use better technology. Each day, many more businesses are going online. Customers are adopting a digital lifestyle. More merchants are come online with QR codes and minimum transaction fees. Most important, fintech has helped in serving the underserved. As I said, it is a great tool to increase financial inclusion. It also adds the growth of women by joining hands with NGO and self-help group to promote literacy and setting small enterprises. The government is making effort to build a strong and safe financial technology ecosystem, and we are confident that the public-private partnership will increase financial inclusion and provide modern financial services for all the Indians. I, as a Minister of State for Finance, expect from all you to organize such webinars and such meetings to make this technology more and more useful for the people. I congratulate all the office bearers and all the audience and everyone for organizing such a good webinar, because I understand this such types of inclusion or the webinars will help to increase the digitalization, and the technology is also important. Lastly, I congratulate everybody and expect more from all of you. Thank you very much.
Well, thank you very much, Honorable Minister, for talking to all of us. We are sincerely very, very grateful you could spare some of your most valuable time and join us here on our today's program. Thank you once again, indeed. And I'm going to...
Thank you very much.
Thank you.
We will seek on you with your time for further discussions and guidance. So thank you once more. We're very, very grateful that you joined us. Thank you, Jim.
Thank you, sir. Thank you.
Just to get it back on, I'm sorry, Smriti, I'm just taking it back. I think we lost Manoj in between. So Manoj, you would like to complete your... Unfortunately, technology didn't work with you, and obviously we would also like to hear from Mr. Chandrasekhar, who has very kindly chaired the jury and has devoted so much of his time. Manoj, back to you.
Thank you, Deepak. Very kind of you. My apologies to everybody here. I had a bit of a downtime at home. So I was talking about some of the measures that have been taken and the latest measures that have been taken by the RBI to improve the security of digital payment channels while ensuring user convenience are absolutely commendable. The industry has engaged each one, many of you here and others who have engaged closely with the RBI to build solutions that not only ensure customer convenience, but also sensitize customers to responsibly use digital payment platforms. At a time when a growing number of our customers prefer to connect with us digitally, at American Express, we continue to invest deeply and expand our relationships with them in ways which go way beyond the card. We are focused on delivering the world's best customer experience. That is our vision also. We elevate our membership services and we pioneer products that shape the future of commerce. Lastly, I just want to talk about the topic at hand, which is the play of fintechs in the Indian digital payment ecosystem. There is a very heightened pace of innovation that is happening in the current ecosystem, and a lot. It's very conducive. And given that India is right now the fastest growing ecosystem globally and the third largest across, fintechs have revolutionized the payments ecosystem in the country by delivering on customer-centric innovations. There is a significant, and we just can't undermine this, significant play of partnerships between the financial services majors and fintechs who can collaborate to speed up the availability of financial services to a wider base. I really believe that we are at the cusp of data and fintech revolutionization, personalization of finance, and how data across entities can be shared to build customized, individualized financial products and services for consumers and businesses. And we're just about getting started. We have at American Express something called Amex Ventures. It's been now there for a decade. It's become literally a part of the fabric of modern fintech, wherein we make investments through that. So we've invested in companies like Stripe, Blade, and Bill.com. And Amex, like I said, has become a part of the fabric of modern fintech. In conclusion, all I would like to say here is that while India continues to be a cash major economy, where the shift is happening, it's happening at a pretty rapid pace towards digital. But I think we'll be foolhardy to assume it's going to happen overnight. It's not going to happen overnight. When you look at even things like credit card, there is only 2% of the total population who have credit cards, with about 55, 60 million credit cards in circulation. A lot of debit cards are there, but maybe about 900 odd million debit cards. But then anyone who opens a bank account gets a debit card. And these are not unique individuals, because a lot of them have multiple debit cards. People still resort to cash as a mode of payment. And that was, again, evident, when we saw that cash in circulation, how quickly it came back post, wave 2 of COVID, and when lockdown opened. So it's really a journey we are all on, and we are witnessing a very strong thrust towards digital industry. All the players here, ASSOCHAM, I would really again commend ASSOCHAM for the initiatives they have taken. And these kind of forums are what will help us get to where we need to get to as a country, given the sheer opportunity that exists in India. So once again, thank you very much for giving me the forum and platform to share my views. Thank you.
Thank you, Manoj. Mr. Chandrasekhar, I just saw you use a handkerchief. I hope everything is well and you're fine. It's very scary these days, So I hope everything is fine with you. Over to you, sir.
Thank you, Mr. Deepak Sood, and thank you for your inquiry. I think these days it is dangerous even to sneeze, because the first thing people ask is, are you all right? So I assure you that I'm fine. And most certainly nothing that can be passed on virtually, but all good. So very good morning to all of you. And at the outset, President of ASSOCHAM and the MD of TCIL, Mr. Vineet Agarwal, respected industry leaders who are part of this session, and distinguished participants, and most importantly, all the award winners. We heard the list just a few moments ago. It's really a pleasure for me to participate in this virtual event to recognize the winners of the ASSOCHAM FinTech and Digital Payments Awards 2021. It has been my privilege to chair the jury, consisting of some of the top academic dons and industry veterans as well. Our jury selected the winners based on a rigorous selection process that was facilitated by PwC as the knowledge partner for the awards process. The awards had the theme of Fintech for the Underserved, Future of Fintech and Payments to Drive Financial Inclusiveness. And the process saw applications from 69 companies, including both startups and incumbents. There were 17 award categories, which were designed with a focus on different fintech themes, some of which you had heard about, and of course, when the awards were announced, you heard of a lot of the categories. Of the 17 categories that were planned, applications were received for 14 categories. And PwC was the knowledge partner to facilitate the awards process. A two-level filtration process was adopted, with an initial scoring followed by a jury round to select the winners in each category. And the evaluation was done based on 5 parameters, including clarity of the problem that the company was trying to solve, the scope of the impact, the market potential of the services that the company is offering, innovation and solution differentiation, and the ecosystem enhancement. So based on the scoring on all these parameters, the top 3 applications were selected through the initial scrutiny. And finally, these top 3 were presented to us as the jury to select the winners in each category. It would be an understatement to say that the competition was intense. The jury had a difficult time choosing winners in each category. So much so that the jury also recommended joint winners or runners-up in half a dozen categories, though this was not the original plan. I would like to share a few thoughts about the sector itself. The fintech and the digital payment sector in the country has been the most vigorous adopter of digital practices, which has been enabled by and facilitated by progressive policies which have been declared by the RBI from time to time, and of course the government as well. Given that the financial sector permeates every sector of the economy, this sector has become a driver and a catalyst of digitalization in other sectors as well. And as we heard many of the speakers mention, COVID has hugely accelerated adoption of digital alternatives in every area, which has led to a meteoric growth not only in digital financial services, but e-commerce, insurance services, online entertainment and gaming, healthcare, education, skilling, etc., etc. The government's own individual benefit programs, again, we heard the minister and other speakers referring to them, have now achieved hitherto impossible goals. From a governance standpoint, I'm well aware of the previous limitations prior to digitalization. We have been able to achieve impossible goals of plugging leakages and eliminating inefficiencies, and to enable benefits to reach individuals even during this pandemic time. And it has reached their bank accounts directly without any hassles, thanks to a combination of many things: the digital identity of Aadhaar, comprehensive digitalization of the banking and financial sector, direct benefit transfer, and so on and so forth. And of course, the mobile revolution and the telecom revolution, which is the foundation and infrastructure on which all of this rests. Even the governments, state governments and courts now use the digital option quite extensively and provide all their services remotely. But it's hard to imagine when you look back that this entire revolution has taken place in less than 2 decades in the country. But most of all, I think what has driven this revolution and is continuing to drive it to greater heights are 2 things. One is the entrepreneurial spirit driving startups, and the second is the innovative zeal driving incumbent companies in the sector, both of which are bringing in new innovations and services. It is therefore particularly important to recognize the best in class in various categories within this sector, both among startups as well as incumbents, so that they may be inspired to raise the bar even higher. And in the process, I hope, they also enthuse other entrepreneurs to further strengthen and deepen our capabilities as a nation in this vital part of the economy. Despite the COVID-related slowdown, and even before the recovery that is currently underway, venture capital inflows have hit all-time peaks, in fact, exceeding even China. The number of unicorns has grown explosively, and we are 3rd in the world in terms of the size and scale of our whole startup ecosystem. The awards process has actually given us a real insight into the transformation that is taking place in the country, and what actually all the dry statistics of investment figures, number of unicorns, and the capital raised through IPOs, etc., what all of this really means to the economic landscape of the country. It was truly heartening for me, and I would venture to say the rest of the jury members, to see the energy and innovation behind this incredible transformation, which is being driven in the country by this entrepreneurial zeal and private sector innovation, unleashed by progressive government policies and foundational and game-changing programs like Aadhaar, UPI, DBT, the common service centers in villages for greater inclusion, and the Digital Initiative, Digital India Initiative, and many other things. Many of the speakers referred to data as a critical element, and without trying to repeat the old cliche of data being the new oil, but the importance of data is absolutely clear now. What I think we do need to think about is a more comprehensive data policy, which balances some conflicting objectives: privacy and value addition, innovation and security. All of these need to be balanced in a comprehensive data policy. And this needs to be done keeping in mind, all the stages and steps in the data economy, right from collection of data to the monetization of data and the sharing of data and all of that. And I think only such a far-sighted and balanced and nuanced data policy will help unlock all the latent value in the mountains and mountains of data that are getting accumulated through all of the transactions that we heard about. I'd just like to conclude at this point by taking this opportunity to compliment ASSOCHAM on this entire effort and to congratulate all the winners who were recognized and awarded today. From the whole nation, I might say, more power to all of you. Thank you very much.
Thank you very, very much, Mr. Chandrasekhar. And we thank you. We are very grateful that you could join us this morning on our program and talk to all of us. I'm now going to very quickly request Ms. Richa Mukherjee, who is the co-chairperson of ASSOCHAM Fintech Council. She's also Director Public Policy and Corporate Affairs at PayU India, to conclude and propose a formal vote of thanks.
Thank you, Samriddhi. Good morning, ladies and gentlemen. On behalf of ASSOCHAM, I would like to thank Dr. Bhagwat Kishan Rao Karad, Honorable Minister of State, Ministry of Finance, Government of India, for his presence today. I would also like to thank all the distinguished guests present in the inaugural session today and other panelists for participating in this very productive conclave on Fintech and Digital Payments Awards and Conclave 2021 with the theme Fintech for the Underserved, Future of Fintech and Payments to Drive Financial Inclusiveness. The growth of Fintech is one of the most significant developments in the financial sector in the past 5 years, and we have seen an upward growth trajectory over time. This is also evident by the increase in the number of Fintech companies founded and the investments that they have attracted over time, and especially since last 5 years or so. The Indian Fintech ecosystem, it sees a wide range of subsegments, including payments, lending, wealth technology, wealth tech, personal finance management, insurtech, regulation technology, regtech, as we normally say it, and open banking. And just to put some facts around it, the fintech market in India is valued at about INR 2,000 billion in 2019 and is expected to reach about little over 6,000 billion rupees by 2025, which is like expanding a CAGR of 22.7% during the 5-year period up till 2025. For inclusive digital financial services to have a real impact, one of the most important things that we have several of the important things that we have learned from our leaders from Perfios, MasterCard, Visa, Amex, and the ministers today is it's all about financial transformation, digital transformation, global payments innovations, and open banking initiatives, and how we leverage our data, whether it is ONDC, OCAN, and various other initiatives that the government and the regulators are talking about, and the impact that they have on the business opportunities. For digitally enabled payment ecosystem to really take off, this includes a very forward-looking policy and regulatory environment and support from the government and policymakers. We really value the dialogue that happens between the policymakers, regulators, and the private sector, and we want to encourage it further for the better understanding and supporting inclusive and responsible digital financial services. Last but not the least, we discussed the way forward and how ASSOCHAM can support the extension of responsible, inclusive digital financial services that promote broad-based economic growth. ASSOCHAM understands that developments in financial services and how it can significantly promote the access to low-income households to financial services, to the underserved and unserved as well. via financial services, we are trying to increase the literacy, financial literacy, digital literacy, and SMEs access to financial services, including affordable credit, facilitating their integration into the global value chains and the markets. We have several committees in the ASSOCHAM, one of the committee, Fintech committee. We are excited to work towards transition towards a less cash, more diverse and financially inclusive economy, which is geared towards introducing an ever-widening population to digital financial services. As ASSOCHAM, we'll continue to work closely with MeitY, Department of Financial Services, Ministry of MSMEs, RBI, SEBI, and Department of Economic Affairs. While concluding, I'm of the opinion that 2020 has accelerated the adoption of digital services in India in a way which no other year could have done. COVID-19 has pushed contactless digital payments to new age groups, new locations in India, reaching to more rural areas and older age groups. So we are driving in for more and more digital and cashless payments as what it was earlier prior to 2020. Let me again thank all the moderators, panelists, members, and other guests for today's event. ASSOCHAM supports improved and innovative approaches for addressing challenges in the industry, and we'll remain committed and at the forefront for transforming approaches to development and achieving greater financial inclusion. Let's keep the dialogue going, and please stay safe and take care of your loved ones. Thank you.
Well, thank you very much.
Thank you.
Richa, and with that, we come to an end of the first session, the inaugural session. Once again, thank you for joining us. Do not go away because we have a lot more interesting sessions lined up for you. We have a panel discussion later in the day, and without any further ado, I am going to now invite for a very special address Mr. Vikas Verma, the chairperson of the ASSOCHAM Fintech Council and the COO at MasterCard South Asia. Vikas, over to you.
Thank you and good morning, everyone. On behalf of the ASSOCHAM Fintech Council, I again welcome all of you to Fintech and Digital Payments 2021. Our gratitude to Dr. Karad, Minister of State, Ministry of Finance, for taking the time to be among us today and grace this August gathering. Special thank you to Sri R. Chandrasekhar as well, former Secretary to the Government of India, for chairing the jury awards and guiding us through the very exhaustive selection process. And also congratulations are due to the winners of the ASSOCHAM Awards 2021. At the ASSOCHAM Fintech Council, we are focused on driving three key themes: emerging innovative and disruptive financial technologies, the rapid adoption among MSMEs, and the promotion of electronic payments and fintech for the benefit of the underserved. And as part of this focus, we are glad today to have released a report on fintech for the underserved, future of fintech and payments to drive financial inclusiveness. As you will read, this report highlights how a partnership ecosystem can fuel greater financial inclusion while fostering a wider range of relevant, reliable, and affordable solutions for the less served. And on behalf of the Council, we also thank the Government of India and the key ministries and agencies for their partnership and support in promoting entrepreneurship and adoption and application of fintech for inclusive growth. As we review the role of digital and financial inclusion in India's economic growth, we will see that India's fundamental advantage lies in its large people assets, our growing economy, our pace of digital adoption, and core tech competencies, which are also supported by a conducive innovation and entrepreneurship environment. Although it's likely going to take some more time to achieve our 5 trillion GDP economy goal, I think we are well on our way. And to achieve this, the economy will now need to sprint to remain at the same place. Initiatives such as JAM, those have been mentioned by speakers ahead of me, have been fundamental game changers and that have ensured equality and affordable access to financial services for India's unbanked and less banked populations. However, an aspect that still needs specific attention is access to credit. With the increase in internet usage and smartphone penetration, it is now possible for financial services firms to look at digital lending models driven by cutting-edge technologies such as AI and machine learning to bridge this gap. However, inclusion won't happen if we don't integrate everyone into the existing ecosystems and provide them with new experiences and opportunities. Technology creates opportunities, but also risks widening the gap in usage and access to digital infrastructure and services between individuals, households, businesses, and amongst geographical areas. Thus, the three most important things to bridge the existing divide are, firstly, to improve the access and affordability with special focus on MSMEs and farmers and agri-system. Secondly, to build infrastructure, especially in the rural areas, and largely to educate the population on how to use this technology. It's a well-known fact that fintech has revolutionized India's payment landscape, reaching untapped markets. The impact has not only been disruptive, but very quantifiable. In fact, India is the fastest growing fintech market across the world. And amongst 2,100 plus fintechs, and they grow every week, over 67% have been set up in the last 5 years. And we also saw that in the first half of 2021, the investments in fintech crossed $2 billion, actually overtaking those for the full year 2020. In building of a digitally inclusive Bharat, the role of fintech in the three large focus areas of MSME, agri, and digital infrastructure will be critical. India is a land of entrepreneurs, as we know. There's 7 crore SMEs, micro, small, and medium enterprises across the length and breadth, and they contribute 29% of our GDP and employ 11 crore people just after agriculture, second largest. The government of India has outlined a plan to increase the sector's GDP contribution to 50% from the current 29. And as India works towards the ambitious 5 trillion economy target plan, this growth of MSME contribution is going to be fundamental to us reaching that target. Despite tremendous potential, many small businesses, as we know, remain disconnected from vital networks and sources of formal credit that they need to thrive in today's economy. Further, and in terms of small businesses, we know they were the worst hit by the pandemic. However, we have seen a lot of leadership coming from the Indian government, led by the Prime Minister himself and the various state governments in coming to grips with the pandemic, especially in terms of measures such as expansion of the definition of MSMEs so that more enterprises can benefit from liquidity support and much more. Moving on to the farm sector. Some of the key interventions in improving productivity in the agri sector can be brought about by adopting emerging technologies, leveraging big data, and designing smart infrastructure such as cold chains, logistics, and automated irrigation. Access to credit and insurance by the farmers by expanding the outreach of the formal credit system, making it accessible and need-based, and expanding the crop insurance cover to cover will be very critical game changers in the agri space. Expanding marketplaces is another idea. How do we help the sector transcend the currently hyper-local environment to become national, and from national to international, such that the high-quality produce of our agrarian sector transcends the limitations of location and time and finds its rightless place in a pan-India or an international stage? Finally, building digital infrastructure is going to be critical. During the pandemic, we have seen that digital has helped us redefine successful inclusive growth. And the last year saw very high low-value digital transactions surging across India as consumers switched from cash to digital to cope for everyday purchases, both online and offline, amidst a growing health and safety concern. Smaller cities we saw contributing 2/3 of the economic demand coming from the e-commerce sector. To further take digital inclusion to the last mile, there are a few key focus areas that we can consider. The first around being opening up of payment activity. That which is more commercially viable can be opened up to drive competition and innovation. For instance, is licensed to offer multi-rail payments, remittances, and DBT. Interoperability plays a big role in driving down costs and actually enhancing the access to financial technology. Finding ways to build plug-and-play payment acceptance infrastructure is one big key focus area. Promoting capacity building programs to enhance digital literacy and empower people with sophisticated technological skills, especially in the less served urban, semi-urban, and rural areas, will be another large focus area. Also, developing a framework to permit non-banking entities to acquire merchants and grow acceptance for payments and electronic payments in the rural areas will be a very large area, very large focus area. And we have seen that this is a very established practice in other mature markets. Consumers should also be able to transfer money from any payment credential to any other payment credential without being able to be tied down to a particular form factor. And finally, encouraging open APIs can help players in the digital ecosystem to deliver better experiences and help payment and banking products reach new and deliver new consumer habits. As the digital economy expands, both in size and complexity, so do its points of vulnerability that may be subject to attack. Especially for businesses, there is a need for strong measures that mandate organizations to follow certain protocols to protect their business and thereby avert any damage to the user's information and the trust in the digital economy. Finally, continuing trust and confidence amongst consumers has to be created for digital payments to survive and flourish. So that consumers can be diverted to use more and more digital payments away from cash. This is also a global priority for us at MasterCard. For many years, we have been focused on bringing individuals and small businesses into the digital ecosystem to help them reach their potential. We are applying the full breadth of our resources, people, data insights, technology, and philanthropy to create a commercially sustainable solution that are built for the long-term inclusive growth. If I name a few, recently last year we committed 250 crore rupees to support Indian MSMEs to recover and rebound from the pandemic and help them leverage their full growth potential. We're also working with banks to support the farmer community. And recently we launched the eRaitu platform, a digital farmer marketplace that's being piloted with the government of Andhra Pradesh to create a cashless agricultural ecosystem. Recently, MasterCard also partnered with the Niti Aayog and released a report on connected commerce. We're creating a roadmap for a digitally inclusive Bharat. Finally, our Center for Inclusive Growth has multiple initiatives to train women entrepreneurs as well, because women will be the forefront of future growth. I'd like to conclude by reiterating that technology and fintech are integral to India's social and economic growth story. And for a truly digitally inclusive Bharat, India will need to adopt a collaborative strategy of public and private partnerships. And these should be smoothly integrated across our rural and urban landscapes. The Fintech Council of ASSOCHAM will continue to collaborate with the Government of India and other agencies and on behalf of industry and enable innovative financial technologies to drive economic growth and innovation. On behalf of ASSOCHAM, I want once again thank you for your presence and I wish you a good day today. Thank you.
So thank you very much, Mr. Vikas Verma. We wish you too a very good day. Do stay with us because we have now Mr. Ram Gopal Subramani COO of Perfios, who will also be talking to us. Over to you, Mr. Subramani.
Thank you. So first of all, thanks for the organizing such a wonderful event and also for having me. So today I'll be briefly talking about the challenges of financing the underserved especially in providing access to credit. Globally, 1.3 billion adults are unbanked. The underserved or the underbanked have low income or volatile income. They have access to no formal credit history. They are challenged in getting access to formal financial products. These people struggle to get their needs met. In the next few minutes, I will deep dive into three aspects of financial inclusion. Firstly, the World Bank Universal Financial Access Initiative laid down the broad frameworks of financial inclusiveness. What are the challenges and what are the solutions? Secondly, a deep dive into the lending fintechs who have increased access to capital to the underserved during the last 5 years. And finally, how the next generation of fintechs improve the financial inclusion in the next few years. The World Bank had launched the Universal Financial Access Initiative by 2020. They had broadly defined that there should be access to individuals and businesses in a useful and affordable manner to various financial products, whether it is to transact or payments, savings, credit, insurance, delivered in a responsible and a sustained manner. Just to understand the enormity of the problem, even today in a country like USA, 26% of the adult population does not have a bank account. 31% of the adult population have no credit history. 1 out of the 4 adults have challenge in accessing mainstream financial product. What are the needs of the underserved or the underbanked? They belong to low income group, so which means that the salaries are volatile, but they still need small financial packages from time to time. It could be as simple as getting a salary advance for when they're short of money towards the end of the month, or having insurance products which cost less than 100 rupees, or being able to create their savings by able to be able to invest amounts as small as 50 rupees in a deposit mutual fund product. Secondly, because of a lack of credit, they don't get access to formal credit. Now, how do we create mechanisms by which we can help them exercise their credit muscles? When they take a small loan, either whether it's a payday loan or whether it is something which is provided by the employer or others, and that's being repaid, can they get benefits? Credit. If they deposit money regularly, can they earn credits? So one of the part is without, I mean, if you go by the mechanism that exists today in terms of how credit scores are important, we will need to figure out ways to address that. Further, most of the underserved or the underbanked are overwhelmed by the experience of going to a bank. I mean, they probably do not understand many of the parts. Now, how can this be made a lot more easier so that they can trust the system and start leveraging and not rely on informal forms of access to finance? Let's take a look at the industry. Under the World Bank's Universal Financial Access Initiative, India has done wonderfully well in having more than 80% of the adults have access to a bank account under the Pradhan Mantri Jan Dhan Yojana. More than 50 crores have benefited under the Arogya scheme, which gives them health insurance up to 5 lakhs. More and more in the recent past, there have been programs, including the PSB 59, which has given formal access to credit to small and medium enterprises. And especially during the pandemic, there have been programs that have been structured with credit guarantee schemes. Reserve Bank talks about 3 key measures for financial inclusion: access, usage, and protection. I would like to emphasize on the fact is usage of financial product by the underserved. Okay, how can this be made easier? And this is what the objective of the RBI as well as is to say that, can you get people to use more and more their bank accounts? Can they go from, can they become less reliant on cash? Can this basically help them build a financial score or a history which gives them access to products? Second is, a lot of these unbanked or the underserved adults, like I said, are challenged by the large financial institutions. Now, for them to rely on this system, it is necessary that there is enough consumer protection, which would mean that there has to be a lot of emphasis on training, awareness, and having controls to protect their interest. What are the drivers for financial inclusion? One of the biggest elements is technology. I mean, all of us understand that. And in the last few years, there have been a lot of technology advancement and access to technology at low cost. Second is availability of data is very important to be able to understand the customer, their behavior, and assess them for credit. Emergence of OpenStack, especially under the India Stack, has enabled fintechs leverage many of these technologies, whether it is the Aadhaar, whether it is the UPI, whether it is the eSign, eNash, or even now the latest account aggregator, to be able to build solutions and deliver it in a more efficient manner to customers. A very strong regulatory support, and most importantly, the access being solved by very deep penetration of mobile devices and the internet. Over the last 5 years, fintechs have contributed significantly in getting access to a lot of the underserved, access to formal credits and payments. We have seen several new products emerge to cater to these segments, like it's a sachet loan, a sachet insurance product, right? Is there more than 400 digital lending fintechs in the last 5+ years have built solutions for different segments of customers, whether it is a kirana store who wants financing, or it is the small and medium enterprises who are basically selling their goods to the e-commerce portal, or it is the education institution which is financing the students for their college education, right? Or providing small loans as salary advances or instant business loans. More importantly, the fintechs also changed the barrier to entry by reducing the loan ticket size to as low as 1,000 rupees. On average, fintechs have been disbursing loans from low amount as low as 5,000 to 3 to 4 lakhs. And here again, they have also structured it so that the tenures can be as low as 6 to 8 weeks, or a ticket size of as low as maybe 10,000 and maybe 2 years. The other part which fintechs have done very wonderfully is to provide them a repeat and revolving credit. So which means that once they have serviced their loan for a 6 weeks period, they immediately are able to get another loan for a longer duration, and in this process help a lot of small and medium enterprises and individuals who did not have any kind of a formal credit history build their credit history. We talked about the factors with e-commerce going mainstream. The seller financing became very important. So players like Capital Float, Lending Card, Udan have really helped these small businesses get access to finance with an aspirational youth who are mobile first citizen. Now they have access to small personal loans, whether it is to purchase a 8,000 rupees phone or it is to sign up for a program with a Udemy, Coursera, or a student, a school student getting coaching on Byju's, right? And also players like Kashi and Early Salary have given salary advances products. Interestingly, in the last 3 years, a lot of the large banks and large traditional NBFCs have also transformed their businesses to be digital first. Now they today offer personal loan products, business loan products completely on a digital channel by which they're able to reduce their entire cost and be able to deliver customer instant access to finance in less than 30 minutes. And the government of India has been very proactive in making sure that the MSME segment, which is 63 million, has more and more access to finance through programs like PSB 59, which guarantees you a loan of up to 1 crore in less than an hour. Then also the program for the street vendors, where they were being given loan of amount of as small as 10,000 rupees. Okay, and last year more than 3 lakh such vendors were financed in the first tranche of the program. And the pandemic had a very significant impact on small businesses and businesses across the board. And also the financial institutions had significant challenges in terms of their collections. But through the various credit guarantee programs, the government has ensured that these institutions have the resources to fund these businesses, and the businesses get enough time for them to recover and sustain their business and repay. What has contributed to the fintech's success in the last 5 years? Advancement in technology, availability of digital data, whether it is the data of a bank statement being available digitally, or it is the SMS data available from a mobile, okay, or things like satellite data available, location information, which helps you to identify what is the income distribution of a given PIN code. Right? Increased mobile and internet access, strong government support, a very favorable demographic. 65% of the adult population less than 35 years of age. Be it perfios have played a very small role, but a significant role in helping many of these fintechs be able to access digital data in real-time basis and also build solutions that helps them prevent or detect fraud. A large part, more than 30% of the financial inclusions, which has happened over the last several years through the fintechs, have largely depended on our products. Moving on, how do we see the future? In the last 5 years, there has definitely been a great progress in terms of addressing the needs of credit for the underserved. But there is still a significant room for improvement because access has been solved by mobile first approach, but that's still access for a smartphone. What about consumers and citizens and others who still operate with a Nokia 3110 phones, right? The markets that have been addressed are largely urban and semi-urban. Tier 2, Tier 3 cities and rural areas still do not have the benefit of many of these fintech revolution. Small sachet products in terms of credit have been delivered, but it is important that India, which has basically had a very good trend in terms of savings, also looks at programs and products that can help, especially these segments, of customers, build a good saving record along with a credit history. More importantly, financial well-being of the underserved is the only way to uplift them from the underserved or the underbanked to banked. Less than 2% of the Indians have own mutual funds. Less than 5% of the population has access to insurance. Access to consumer loans is way below global benchmark. Small businesses that contribute to 1/3 of the GDP, only 1/6 of them have had access to formal credit. The challenge brought about by COVID pandemic has really understood the role of digital in providing access, understanding and helping customer behavior for the financial institutions to protect themselves and manage the risk. So what are the technologies, trends that we see going forward? See, to a large extent, in the last 5 years, fintechs in collaboration with some of the banks were addressing certain segments, but it was a 1:1 relationship. And it is important that the finance, instead of the consumer going to the financer for financing, the finance has to now be available at the point of engagement. Whether it is a employee in a garment factory who wants a small loan or a salary advance, or they want to basically deposit money and create a savings kitty for themselves, or it is a small business that is working for a large enterprise as a supplier. So where they are able to get finance on their invoices or purchase order, and more importantly, also be able to extend some of the financial products to their employers through these channels. So that is where we see embedded finance becoming a significant shift in technology, which would leverage the network and be able to get last mile connectivity. Subsequently, as the engagement moves away more and more from the financial institution to the point of engagement, it is important that more and more mechanisms of verifications are done digitally. And there is also a lot of data being shared by these consumers, by these enterprises or point of engagement, so that the trust on the consumer is established and the risk is shared. We see that the fintech continue to be very critical, and they will act as a bridge between the financial institutions who have access to large capital and have all the risk models and ability to deliver the right kind of products, these new products, to the point of engagement, whether it is an enterprise, whether it's an education institution, whether it is a trade body, right, who have access to these customers, and they also have the relationship and trust with these customers. Data continues to be very critical. More the data is there available, where with the fidelity of data guarantee and the reliance of open systems are critical for these things. And today, after several years, the account creator ecosystem has gone live. We have more than 7 financial institutions who are live, and we expect 20 more financial institutions to come in. We at Portfolios are very excited about how we are working with our banks, NBFCs, fintechs in helping to reach the underserved and move the underserved to be served and banked. Thank you.
Yeah, thank you, Mr. Subramani. And we'll now be taking a quick 10-minute bio break and resume our today's program at 11:45 sharp, where we are going to be coming back for a panel discussion on the future of fintech and payments, regtech and cashless, and the role of fintech, in fact, in achieving the national goals. The session will be moderated by Ms. Geetika Raheja from PwC India, and we'll now break for 10 minutes. Thank you.
Hi Nalin, hi Varun, hi Geetika, hi Vicky.
Hi Mohit. I think we have a 10-minute break.
Yeah, hi Mohit. We have a 10 minutes bio break. We have started since 9:30 in the morning, and we go on till 2:30. So we thought that let's give a small to the audience to do the necessary business.
Perfect.
Sir, good morning. Sir, you're on mute.
Varun, should we start?
Another 2 minutes.
Okay, fine.
Haji, hi, good morning.
Good morning, everyone.
Hi. Hi, Mohit.
Hi, good morning. Am I audible?
Yes, please. Loud and clear.
Hi, Nalu.
Gitika ji, we start at 11:45, so we still have 3 minutes to go.
We'll just wait for maybe a couple of minutes and start.
Yes, yes. By 11:45, we can start.
Yeah, 11:45 we can start. Do we have Akash?
Just following up with him, he said he's going to join by 45. So
Yeah, he'll join by 11:45 only.
45. No? So we can start. Let him join. Or we can wait minutes.
Let's start at 11:45. Sharp.
So, Mohit, are you going to be still based out of Delhi or plan to move to Mumbai now?
Nalin going to be based out of Delhi for now, but we'll see in due course of time what happens.
Okay.
Radhi, you're on mute.
Yeah, I know. I was just waiting. We'll start in another 1 minute.
Uh, 11:45. Samriddhi, over to you. We can start.
Yeah, thanks, Varun. So welcome back, everybody. And as promised, we now have a panel discussion on the future of fintech and payments, RegTech and cashless, and the role of fintech in achieving the national goals. Now, the session will be moderated by Ms. Geetika Raheja, who's with PwC India and takes care of payments transformation. And as our panelists, we have Mr. Nalin Bansal, the Chief of Fintech at NPCI, Mr. Mohit Gopal, who is SVP Strategic Initiatives, VAS and Omnichannel at PayU India. Mr. Arvind Gupta, former CEO of MyGov, is also joining us this afternoon. And once again, we have Mr. Akash Sinha, who is CEO and co-founder of CashFree. So without any ado, I am going to hand it over to you, Mr. Heja, to take the session forward from here.
Good afternoon, everyone. Thanks, Samriddhi, for the quick introduction. So like Samriddhi mentioned, our topic for today is essentially understanding the role of fintech in financial inclusion in a nutshell. So far, and also the contribution that it can have towards national goals, right? So when we speak of national goals, let's understand some of the national goals that we are talking about, right, from an RBI perspective. The way we understand it, the focus is on achieving financial inclusion. And when we say financial inclusion, we mean not just access, but also adoption of financial services. The second is ensuring security and trust in the entire ecosystem. The third is essentially bringing more use cases within the ambit of digital transactions, essentially. So along these three pillars, right, are mostly where the national goals rest. Now, on the other hand, let's look at fintech. We all understand the tremendous growth of fintech in the country today, right? Most would argue this is probably the best time for fintech in any other country also. Now, I think the holy trinity of regulation, collaboration, and innovation has largely fueled this kind of growth in the country today. But let's understand from our panelists today how this fintech and financial inclusion goals intersect and whether fintech can be the answer to financial inclusion that we are looking at. So maybe we'll start with our panelists and get a quick introduction and opening remarks around this topic of financial inclusion meeting fintech. So Nalin, over to you.
Thanks, Geetika. The hot topic of the day, I guess, and of the season, and on the financial inclusion, I think maybe as we progress into a conversation, the birth of NPCI, I think, started with this journey. Our first program was to promote the need and the use of debit cards, and that's how our journey started from a financial inclusion point of view. But I think over the years we realized, and I think that's what we want to touch upon as we move along, is that how the two different streams of financial inclusion have happened. One is on the urban and the semi-urban side of what we call as India, and what we've been able to achieve on the pure rural and the unbanked side, which is what we call as Bharat. And I think two very different things have happened. And to our understanding, while UPI and RuPay has focused, rather UPI has focused on the India part, Aadhaar-enabled payment systems, some of the other things have brought in a certain amount of inclusion as far as Bharat is concerned. And I think that's the way I think we've seen the growth, and happy to have some discussion around it.
Great. Thanks, Nalin. Mohit, we'd like to get your perspective. Given all the recent events, I'm sure you will have quite a bit to contribute to the fintech part of it.
No, sure, and it's such a pleasure to be with in such a great company. I mean, Arvind with his background with not just my account, but also with iSpirit, Nalin with what all he's been doing at NPCI, and what we're looking forward to so much more. Akash as founder of one of the hottest startups in the fintech space. I think I'm a more traditional, middle management type, and I think it's great to be here. From my perspective, I think you started off brilliantly by saying that when it comes to financial inclusion, it was about, we started with access, but now we're moving on to both the usage and the quality sort of phases, right? Those are the three real pillars of getting financial inclusion out there. Access, in some ways, it was with getting bank accounts and also building infrastructure, which I think India has done a brilliant job of doing. Now comes the usage part of this, and usage both in terms of, and this is where really fintechs have a role to play, is how do we actually ensure that people who now have bank accounts and there's an infrastructure where they can make payments or they can digitally transact, not just for buying something online, but for actually improving their financial well-being by making the right sort of investments in insurance policies, in ensuring that their families are provided, get medical coverage, etc., right? There are many other things there. So that usage piece is where there's a lot of work which needs to happen, and I think all of us are super excited to work there. And a lot of that is to do with knowledge. It's to actually get people to understand how things can happen. And this is where we move to the third part, which is quality. Here we're talking about grievance redressal. How do we actually improve and get people to trust in the systems? Because we must understand that we're getting people to actually change habits and lifelong habits, not just in usage of cash, but also in physically going somewhere and trying to get something done. And now all of that can happen digitally. So the ecosystem is there, but we're sort of changing habits. And I think this is where it's not an overnight journey, but this is where fintechs really have a role to play, and we can actually get adoption to happen much faster than anything else. So I think that's where fintechs are very interesting. And I would love to just talk about the fact that in India right now, with what iSpirit started in some ways, with what NPCI has taken to center stage, and a very brilliant regulatory environment, not just the RBI, but also government in different, and there's so many different entities involved. I think all of us are very clear on what the end goal is. And for us, who are on the business side of it, I think we do see opportunities, but we also have this burden of responsibility. And I think that's the interesting part of where we stand.
Thanks, Mohit. Arvind, you want to come in with the opening remarks and the perspective around government and regulation and how that contributes to this journey?
So thank you, Geetika, and everybody else, Mohit and Nalin and Akash for being here, and ASSOCHAM for first having me as a jury member and now as a panelist today. I think our particular session is on the future. Number one, you have to understand that I being a professor also, I teach that you always learn 4 P's of marketing. The 5th P of marketing is today or company strategies policy. And here the government has taken really center stage, along with government, RBI, the central bank in India, the whole ecosystem has really adopted being the role of the enabler as well as the disruptor. And that's something we have to understand. When that becomes a DNA of an ecosystem, then that's very difficult to reverse and to go in back here. So the future really lies with this thinking continuing. Now, with the thinking continuing, everybody's talked about India did the biggest access, which is Jan Dhan program. We went and we just celebrated, 7 years of Jan Dhan, where we population scale of 420 million, about 42 crore bank accounts were added. That's like twice the working population of America. And and it couldn't happen without fintech and the government becoming a center stage in both policy making, in implementation, as well as startups contributing to various aspects of it. To the point everybody makes, I will agree, but in a way disagree with what I'm going to say. I think the moment of fintech has just started. We are not still evolved. I mean, we are seeing a few unicorns and new headlines every day that this company has become unicorn or this company has raised so much of millions of dollars. I think this is just the starting of this new innovation curve that India is disrupting, not only the finance and the insurance and all the things, credit business in India, but also globally. I think we are in the boom phase, not at the reach at the peak. We'll see the peak in another 4 to 5 years from now. And I would like to see the future of fintech being defined globally from India. And just as a very light note, I have personally demonstrated that in India you can actually open a bank account in less than 2 minutes, actually less than a minute, which nobody globally has ever been able to match. So our promise is regulation, policy, excellent ecosystem, and lastly, the great effort being made by whether it's NPCIL, iSpirit as a group of volunteers and others in building what is very unique to India, which is digital public goods. India is the only country in the world which has digital public platforms. Now, when that becomes an approach, as I said, that becomes the DNA of the country. So today, if you're thinking of account aggregators or open credit or e-commerce, we are thinking of how can we make open digital platforms or networks which then can be leveraged by everybody else in the ecosystem. So NPCIL might or UPI might do a revenue of X, but it has created $1 billion in front of it as value creation. So I think the measurement is very different now. from what 3.5 billion transactions, I think there will be moving about 25% of India's GDP. This number will only go up.
Excellent. Thanks, Arvind. Akash, initial thoughts around FI and fintech and what the future holds?
Thanks, Kedika. Thanks for ASSOCHAM for inviting me on this panel. Yeah, I'd like to echo what Arvind just said. Just to start by, we just started.
Akash, if you can just be a little louder.
Am I audible properly?
Yeah, much better. Go ahead.
Awesome. Yeah. Yeah, I mean, just touching base on the point where Arvind dropped up, right? His point was fintech era just started, and I totally, second that argument. So we are running this company for 6 years, and still every day we feel like, we were just scratch the surface, right? And if you look at last 5 to 6 years of growth of fintech and financial inclusion, right? And these have been very proportional growth in both these segments. And just to put more clarity on the picture, there were 4 major, I'd say, innovation ingredient which made this possible, right? First was we as a country solved for the identity, right? It's easy for us to today, onboard a customer or a business digitally, right? I mean, that is very, very important part of any financial service distribution. Second, we have put a lot of effort on, giving people the bank accounts or any kind of digital modes, right? Through which they can access financial service, right? So that Jan Dhan Yojana, whatever program we ran 3 years back, that have helped the entire fintech and financial inclusion initiative in a very bigger way. Third was creating of scalable platforms like UPI, IMPS, PBPS, AEPS, right? Which NPCI played a very big role. And fourth, very important, making this scalable platform accessible to fintechs and all the other companies who are in the market and trying to leverage all these capabilities to distribute their product, distribute their service, and bring more customers inside the fold of financial inclusion, right? So from now on, I feel like from a fintech founder perspective, I feel we can go back to these 4 crucial pillars, right? I mean, there's still few things we as a country can do with identity. Recently, RBI allowed, you can do video KYC, and those are very welcome moves, right? I mean, if you can do more and more such things on identity, it will make life of current fintech and also future fintechs much easier. Second is on the bank account part. I mean, today, almost all of the Indian adult population, they have a bank account, but still, I mean, there are some challenges accessing that bank account in the right way, right? Say if you're trying to do something online or do something in an offline manner, are you able to leverage a bank account in that scenario? That is a question, right? Even if they have bank account, we still have to, make those bank accounts accessible to them or make it usable to them, right? Third is the platform, which is working super. I think I'm sure as a country we'll keep on building new platform. And fourth is there is a need of making this platform accessible, which banks and fintechs are working in a good way. It's the entire. See, I mean, I'm seeing this journey for last 6 to 7 years very close, right? The entire collaboration framework between banks and startups have matured tremendously. Right? Today, I'm sure banks, as an entity must be thinking, how do I do this with the fintech? What are the revenue, composition I can have? And what are the other growth in the business I can foresee by partnering with fintechs? So that is already happening. And that should happen in a slightly more bigger and bigger way in the coming years. Right? If we can focus on just 3-4 ingredients, I'm sure we as a country will see a lot of boom in the fintech. And again, going back to the Arvind's point, right, going global from India, right, that we already are seeing a trend, right? India is still a front runner in a lot of this innovation, a lot of this initiative. And we have a good scope in going to the markets where, those guys are in that level where, we are right now.
Sure. Thanks, Akash. So I think we spoke about a few things here. We spoke about the differentiation between Bharat and India. We spoke about the quality of access, the trust. We also spoke about how India is a front runner in building digital platforms, right, and ensuring access to those open access to those digital platforms. Nalin, just if you could come in terms of to say largely the infrastructure has been laid, right, and from here on it is now up to the participants to take it to the next level. What do you think the role of digital infrastructure going forward? What else can be done, and where do you think more financial inclusion can be achieved through more digital platforms?
I was I was listening to Arvindji. I think he made a very important point that the the leading aspect to all of this has been the policy part of the of our country,
Right.
which has allowed an ecosystem like this to grow. The creation of NPCI, the policy around how people can connect, how people can onboard. And I was listening to Mohit, and Akash, and then the problem of access has been solved to a large extent. All of us know numbers, whether it is on Aadhaar or it is on UPI or some of the other platforms. They have doubled, tripled over the last 2-3 years. I think the time is now is to say that one, to assess ourselves, where are we really? Now that we've had had demonetization as an event, we had a COVID as an event, and these have obviously helped people to adopt a little bit more. It is just to sort of broad base and evaluate as to where we stand. What have we sort of achieved up till now, and what needs to be achieved. So in areas where access has been made easy, how can we better utilize that access to do what we want to do? And areas where still access has not been there. I want to bring in a point, an example here. Some of you may have seen this. One of the leading fintech players in the market, PhonePe, released their Pulse report. It was just released last week. It's very, very interesting. If you go through that, they have now, of course, this is one player on UPI, and then they're based on what they've seen for their subscribers. But some very interesting facts come up, and then this is on the UPI side, like I said, in terms of the top 10 states that that are covered. Of course, we know Maharashtra, typically southern part of the country, is more digitally inclined than the west and the north and the east. But the surprise element was UP. The second most unique consumers are registered out of UP. Of course, Karnataka and AP and others. But the fifth largest state was West Bengal. So I'm just saying that there are these trends emerging where we believe the access has gone beyond what we thought it always would be. Also, in terms of districts, Rangareddy is the topmost district in the country. I didn't know that, at least from a PhonePe perspective. You can see that in the report. And then in terms of the pin code, I would say Noida, West Delhi, Thane. These who would have thought that these are the topmost districts, pin codes in the country, who would have access to digital payments, who are using UPI. So just saying, it's important to sort of get an assessment of where we are with this access. On the API side, I think, so this is India, but I'm saying on the Bharat side, of course, Aadhaar-enabled payment system has done tremendously well. Obviously, well coupled with the government's policy around disbursement. Whenever there are large-scale disbursements, people are able to access that money immediately. We see the day the schemes are announced, the next 3 days, systems are completely, maxed out in terms of people accessing their accounts and taking money. So imagine, today you announce a scheme, in 5 days the money is in the hand of the people. So that's access to some extent, right? But the point being, and like Mohit was talking about, is where do you take this access? And I think here comes the responsibility, now of the ecosystem to say that how responsibly can you pick this up and do some of the things which are not available. So the point about what do you do with this money? Where do you deploy this? So the whole use case around, I think, investment, micro insurance, micro investment is solving itself, but I think it needs a little bit more work to be able to provide those financial services. I know the market is crazy about credit and micro credit, but I think these are also open spaces for them to sort of look at. And then the value is not just with digitally, as they call it, application or smartphone organizations, but I think it's also with organizations like Spice, Pay Nearby, Bankit, who have made that possible. They have gone to the level of every smaller district and pin code and brought certain level of digitization of payments in those segments. So I'm just saying that responsibly using this access will be very critical now as we move along.
Right. Sure. So Arvindji, I wanted your perspective in terms of, you spoke about how the entire ecosystem has come together, contributions from the government, contribution from the regulator. From here on, what do you think is further required to plug in the challenges which still exist around maybe adoption, right? We've largely solved the problem of access, adoption to digital payments, as well as, like Nalin spoke about, credit, investments, etc. So where do you think that gap can get like plugged in?
See, I think everybody is speaking the same language, and I'll extend that. The biggest, the next few steps have to be the security cover, the family social security net. That the bottom of India. Everybody talked about India and Bharat. 53 million or so families are in the rich or the middle class and above, but it's the 200 million families, households in India, which are actually the aspirational and below poverty line that we need to impact. And thankfully, today we have 100% coverage of a bank account at a household level, which basically means there is a bank account in every house. 85% of the population has banking, adult population has a bank account. Now, the need is, as I said, building a security net around them, which means savings, if somebody talked about it, insurance, getting access and information to money at the right time. But one of the biggest aspects I want to bring into this discussion is trust in technology. And that happens, adoption. We have done multiple studies and surveys. We see the trust in technology comes from many folds. Number one, who is backing this? Is it backed by the government? Even when the postal bank started, the trust of that post person to go and deliver that money or take that money was much higher than any other banking correspondent, right? So that small, the societal factors really make a very big difference in India. Two is the grievance systems and the cybersecurity issues. So literacy around fintech, educating them not only on how to make better savings, how to make better instruments, what are the predatory issues with predatory loaning. That will really that will change over time. So that education and literacy is a very, very important aspect. And the third aspect, according to me, is the enforcement mechanism around fintech and fintech crimes and this whole issue of get rich overnight. Those schemes don't exist. So most studies have shown that people lose trust in systems or digital payments or adoption or banks when they get scammed, and that one person getting scammed impacts 1,000 others. So the government has been very forthright in setting up a FinCert, but those initiatives need to be extended a lot more. Startups need to come out, and I know our startups are very light. Our ecosystem companies are very light, and when I say light, means their redressal systems are mostly on chats or at best, and sometimes on a phone call at best. But the adoption to the 200 million families needs a better human touch with the technology aspect to it. Voice, maybe, how can we do a lot more voice-based support, which is automated? So AI using voice support using AI and things like that, because this category of India cannot type. They can't send their grievances over chats or emails. So we have to be very innovative in that, and that's where I think we have to look forward.
Thank you, Arvind. And that sort of sets the base for some of the next few questions, and that's where I would want Mohit and Akash to come in. From a fintech perspective, do you foresee some kind of a trust deficit within the ecosystem today in terms of the customers, or do you think there is a lot being done on the technology and other aspects to build that trust from a fintech perspective? Mohit, do you want to go first?
Yeah, sure. So I think Nalin also alluded to India versus Bharat. And I think there's also what we have seen is there's a certain age. Over that particular age, then people are more reluctant, even when they have a full understanding of the system, to actually look at newer ways of doing things. But the third thing which is there is that we are, if you think about this, it's largely there is, I'm talking from a payment fintech perspective. This is a business of moving either data or money, and both of which, as Arvind correctly said, rely on trust, right? People need to trust the system. They need to trust the ecosystem. They need to understand that everything is safe. And when issues arise, which often enough does arise, how do you actually address that? And address it in a way that they will go back and tell 5 more people that I tried this, it worked, or even if it didn't work, it was sorted out very well. And that word of mouth adoption is something which is not there yet. What is actually happening is it is a lot of it's starting at a particular with both businesses, fintechs, and as said earlier, also government creating this infrastructure, showing people that there's another way of doing things. But then until it comes from right from a person's individual's heart that this is what I want to do and this is going to be good for me and my family, things don't change that easily. And I think we are seeing that piece. And there are many aspects where we can actually go down which different paths. One is, of course, localization of content. And we speak about this in many other contexts. But in fintech so far, because it's mostly in English, and that means much of India is actually not really comfortable enough with what they're seeing. In certain cases like UPI, of course, a lot has been done, but there are many other aspects where it's not, progress has not been as fast. And I think that's another piece which everybody will focus on. The other thing is, in the past, there was a lot of microfinance which was happening. A lot of it was much more regional in nature and scope. And so even when they did well, it was usually they did well in a particular region and they could not really do well across the entire universe. So going to a different state would often, result in much either higher operating costs or potential failures as well. So with digitization, all of this, it's possible to really create stacks which can even address microfinance needs across a larger swath of the population. But then the back-end models also need to factor in a lot of data which today is not there in the systems. So the moment you move to what is called a thin card or a thin file customer, there the ecosystems are not really there because we don't have all of that. And I think there, one of the things which I'm very excited about for the future is we talk about neobanking, and I think it's still in its infancy in India. But in due course, when we recognize that a customer's data belongs to the customer, and therefore a customer has the right to actually use that data and share that data with another institution, we'll actually see a lot more adoption of, because different financial institutions have a different risk appetite and are willing to do things slightly differently, right? So there's overlap in what they do. We will actually see an increase in the number and variety of services which are offered to people. So I think a lot of it is there are various different ecosystem elements which need to come in to build what Arvind correctly said is the trust deficit which is still there today.
Thanks, Bharat. Akash, you want to come in on the entire perspective of building trust and the role that fintech can play in, or the role that you have been playing, and specifically how technology can solve some of these trust-related issues.
Right. Geeta, I mean, if you bring in the perspective of customer who's trying to access financial services for the first time, right? For them, 3 things are important. One is, are they able to access the service or not? Right? Say at any point of time, if someone is trying to access a service and the transaction doesn't happen or the service doesn't complete, right? So that will remove the trust of that person, right? Because I'm trying for the first time, service did not work, so I'll try it maybe after a year, right? I'm not going to try it tomorrow. So for that, we have to invest a lot on the financial infrastructure, right? Are we able to keep the services all the time? Are we ready all the time for people, right? We cannot be, setting a timeline, right? So people should come to us, say, from 10th to 25th. And it's okay for us to not support them on 1st to 3rd, because 1st to 3rd is for the high priority customers. Right? That doesn't work, right? We have to be always available. Second thing is, when they lose trust, when services don't work the way they want it to work, right? Suppose I'm lacking something, my money got stuck, right? Other person did not receive the money, then I'm struggling to just get it resolved, right? If we can go and deep down solve these very small issues, right? I mean, for a person, this just be a matter of 500 rupees, but they again lose trust on the entire system. Right, so their fintechs are playing a bigger role, trying to optimize it, trying to give them better communication, trying to handhold them, and make sure whatever they're intending to do, that happens. Right, so for the larger thing we have to look here is we have to invest in the personalization, and second is security. Right, in this world of fintech, one size does not fit all. Right, we have customers in the urban area which are much more informed, much more aware. Then we have customers say in the tier 2, tier 3, or even rural areas, which have lesser information because of their background or the place they stay, right? And we cannot assume, right, just because you have a bank account, you can access financial services, right? That doesn't happen, right? So today banks give customers the ability to restrict all the online purchase from their cards or from their account, right? But again, as soon as you enable it, it can let you say debit 1 lakh transaction, 1 lakh up to 1 lakh rupees per day, and there a lot of fraud happens, right? So customers say instead of getting into that risk, I'll just disable my entire online consumption of my bank account. So if you can go and let people decide the limit, right, instead of creating a single limit for all my customers, right? As a bank, I do that today, right? I just assume, right? I'll just set a limit of 1 lakh rupees on your UPI account across all my customers. Instead of that, just look at their the customer, the demography, the geography, and set different limits for them, right? Say for you just 2K, even though something goes wrong, we're just losing 2K, you're not losing 1 lakh rupees, right? So we can put a lot of safety nets for the customers so that they become more confident and they know what is the risk, right? Today they don't know what is the risk, right? It's all in. The moment I access something, I can be broke tomorrow. If we look into these factors, for that we need data. We have to look from the, see, even though fintechs, just to point out the we have a lot of lightweight support data, but we have access to a lot of data and we know where things are going wrong, right? We are trying to talking to customer, reaching them. The same time, as a fintech, we need to collaborate with banks and regulator to fix these issues. Right? These issues are out of our control in most of the cases.
Right. Thanks, Akash. So put it to the point around neo-banking and how that is currently in infancy, but going forward, we can see that coming up, and that may also solve certain problems around maybe data and use cases to say. I think one of the things that neo-banking seems to be doing in India is focusing on specific use cases or specific segments and building, using the infrastructure to basically cater to those segments, right? So just want to get perspective around, do we think building specific use cases is also a form of ensuring adoption? So we've seen some of the success with NCMC or NETC, and those are use cases built for a specific purpose, right? Now, Nalin, your perspective around building specific use cases, and how do you think that can probably contribute in some way to achieving the financial inclusion or adoption that we are looking for?
Yeah. No, obviously, I think, like I spoke about the fact that one is to be able to assess ourselves, where are we in this journey? And what are the gaps? What are the pockets that we want to fill? And where the pockets have been filled, what do you want to do with those, with that access to money or access to bank accounts? I heard Arvindji spoke about the Bharat not having the capability to type. Of course, they need the 200 million families. They need a different mechanism altogether. Aadhaar-enabled payment system would have solved one part of it, which is access, but maybe not utilization. Mohit was also speaking about how UP has solved the smartphone story. By the way, as per the PhonePe report, the highest number of smartphones being used are Xiaomi. Nobody thought that that could be the number, but yes, that's a specific use case problem of how do we bring more utilization to the larger part of the to the demographics. And I just want to bring in an example. What we have recently launched on UPI. This is in play. This is not like yet live as in terms of usage. In fact, this was led by RBI themselves. There was a regulatory sandbox, and they applied for people to come in as a pilot for UPI and feature phone. And this got concluded early this year. And now we rolled that out as a full-scale product to the market, which means that today a consumer who doesn't have a smartphone can basically call up a line and pay somebody else or a merchant by just quoting a number. And all this is voice-based, so he can just have access to an IVR line, and then he can authenticate himself, and then he can authorize the payment as a P2P or a P2M, and the recipient party will just be a number. So this is to solve for that. So this use case is to solve for that, and that gives access to that segment which is currently still a cash based, because Aadhaar is still cash based, right? You take out cash and what do you do with that cash, you don't know. Now you can keep the money and use this to start paying wherever you want to pay. So 100% Gitika, the use cases have to be built on the rails that have been built. Now, whether it's on UPI, RuPay, offline, on cards, or it is on Aadhaar, but these use cases have to be built. BBPS, these are all basic rails for us to build as much utilization as we can.
Right. Thanks, Navit. So, Arvindji, you've spoken about the infrastructure policies, and a lot of that has contributed to it today. Where do you think this is going in the future? What is the perspective to increasing the adoption and access story going forward?
Yeah, I think I mentioned that the voice will be key, support will be key, credit will become very, very good. And I think we really need to enable credit at fair rates throughout the country. So the democratization of credit is going to be a very, very important feature as we go ahead, because a lot of small businesses, traders, families, self-employed women and people who, in all parts of the country need access to the right credit, right money. So, and also to really relieve themselves of the jungle of the daily money lenders and, those predatory loan sharks that we call them. So I think that's going to be a very important step. We are seeing already the first, not only first, I think we are in the first few stages of that whole ecosystem being enabled. And I think, as we progress, there'll be new technologies that will keep coming in, which could be blockchain, could be many other. We just launched, for example, V-Means and PCIL, and the government has launched e-Rupee, which is a purpose-based voucher, and such things will also assist in making trust in the system. So people giving money in will have more trust that the money that is being purposed for is being used for the right purpose. So, going forward, I think purpose, trust, addressing of the consumer concerns, voice, what Nalin talked about, and voice not only just in one aspect of making the money move, which is payments, but also support and other things will really make a difference. And the last point is not just related to fintech; it's actually about the overall ecosystem. Where do you use money? Either for consumption, for in e-commerce or education or health. Those ecosystems need to also think about all those things. And I'm on another committee, which is the Open National Digital Commerce platform that we're building. For example, that is taking into account how we can really democratize mobility, e-commerce, food deliveries, and really free a lot of people from the clutches of rent seeking that is happening on certain platforms. So I think the approach of those other ecosystems and then the fintech combined and serving that ecosystem will also define how well the interoperability and the joint working of ecosystems happen. So lastly, India has a great startup ecosystem. Earlier we were the great, there was, when I used to live in Silicon Valley, there used to be a joke that no startup will ever get funded if it didn't have an Indian founder. Now, now I think it is, no startup will get funded if it doesn't have not only Indian founder, but a significant Indian presence, an Indian office, and a plan to address the Indian market. Indian market is very lucrative, and we have, as Indians, we have also realized that now. So a lot of inward looking, our startups are really solving some of the toughest challenges, and our startup founders, we have to trust this new cohort of the startup founders to solve the most difficult societal problems. And I think that's where the future also lies, and the country is in good hands.
Thank you, Arvindji. But you specifically spoke about democratizing credit, right? And one of the areas that we are seeing a big traction in is this entire intersection of payments and credit, right? Using payments data to lend. And I thought one of the key challenges in lending to an ecosystem which is underserved today is determining the credit worthiness, right? So just to understand, Mohit, any views around how are fintech solving that problem today in terms of determining credit worthiness and lending? We are seeing a boom in this entire BNPL story these days. So how is this entire payments and lending story coming together? You're on mute, Mohit.
Oh, great question, Geetika. I think as PayU, we had this great success with LazyPay, which was a buy now, pay later product, which we had launched a few years back, and that still is the market leader. Now, today, a LazyPay would have something like about 50 million eligible customers, right? So on a particular merchant, you'd run an eligibility check to see whether they're eligible. This is largely based on our own data, and we, and when it comes to data to determine somebody's credit worthiness, the more data sources you have, the better it is, because then you can actually understand where the holes in your data are, and you can actually build a better model. But today, that is still in its infancy. Like when we think of buy now, pay later, this is still very, very early days. And as Arvind spoke about in a slightly different context, I think this is just at the cusp of true growth. Over the next few years, I think this BNPL market will move from being what it is today is very similar to what a credit card base is largely. It will move into being a 200, 300 million customer market. And then the next stage is obviously to go to the same sort of numbers, similar numbers to what India has got from a banking adoption perspective, which is at about something like 85% of eligible adults, right? So I think that's where we are trying to get to. And I think it will all happen over the next few years. When it comes to credit, as I said earlier also, we have lots of credit companies out there, many of them who are getting funded, but it is, and it's again, it's an old joke, but it's super easy to lend money. It's super hard to recover it and to actually ensure that you don't end up making losses. So I think the financial models and the risk models need a lot of work. Data, of course, is one part of it, but also an understanding of psychology. Like when you saw the subprime crisis, all the models were perfect. It's just that human behavior, greed, all of those factors were perhaps not accounted for in greater detail. So I think we're just at the beginning of this journey, and a lot will happen over the next 5-6 years. So it's a super exciting time for anybody in this space.
Thanks, Mohit. Akash, in terms of this entire intersection of payments and then moving on to other aspects of investments and credit and other financial inclusion parameters, right? We are seeing most fintechs go that way, right? Start off with payments, get the hook to the customer, and then build on offering more services. Is that how you think the market will evolve, where you will see these fintechs offering consolidated services to customers?
That's correct, Geetika, but I think on the first part, payments itself is becoming more and complex these days, right? With the new regulation by RBI on card storage, tokenization. Payments is not a vanilla service, right? That's how people in India see it, but that's not true. Right? There's a lot of innovation, a lot of heavy lifting we have to do in the payments, be it risk and fraud mitigation, be it underwriting, be it KYC, be it international transaction. So payment itself is one of the complicated services that will continue to offer, and there every company has to invest time and effort. Right? Without that, I don't think they can do a very great job in payments. But yes, I mean, once they are successful in payments, they can definitely branch out and look for other segments. So we at Cashflow also have adopted this strategy, right? We are getting into product like instant settlement, cash advances, where we are acting as a platform and partnering with a lot of lenders in the ecosystem, right? We are not doing things ourselves. And also on the side of BNPL, consumer BNPL, we again act as a platform where we distribute a lot of the BNPL to the customers via those merchants who are on the platform. Right? But going forward, I think to bring more inclusion, more usage, right? We have to be extremely personalized, right? Today, I think we are bifurcating the entire market basis, who's living in the metro cities, who live in tier 2 cities. But I think we have to bifurcate further, right? Even in metro cities, we have to look for people in certain professions, right? You have to build, certain personal experiences, say for teachers, right? Or say for drivers or for doctors, right? And then we adopted teachers in tier 1 city, teachers in tier 2 city, teachers in tier 5 city. Right. So today, I think we have achieved all the infrastructure innovation. I think I'm sure many will come, but we are good in terms of infra. We have a lot of things there. There is a good policy, regulatory environment. But now companies have to do a lot of product innovation. That is the stage where the country is right now, right? And that's where a lot of fintech should come up, right? You may have come across companies who are building neobanks just for millennials, right? Neobanks, say for plumbers or cement factory workers, right? So that is the kind of innovation we should do. We are going to see more and more in the industry, and these guys will need a lot of infrastructure support in the backend, be it from the payments company, be it from the lending company, be it from companies in wealth, right? Be it the companies in the cross-border space, and that's how we see the entire story progressing in a positive way in the future, right? Without personalization, without finding, India is a very large country, right? We have more than 130 crore people, right? We cannot just see everyone through 2 or 3 lenses. It's not possible to cater to their needs perfectly. We have to create branches. We have to create say 100 or 200 cohorts, and then start going after it.
Sure. Thanks, Akash. I think we are nearing the end of our discussion, and I think I would like to get perspectives, final parting perspectives to say, maybe by 2025, if we had to just, future gaze a little, what is the single biggest transformation that you think India will undergo when it comes to the entire financial inclusion story? Maybe we can start with Arvindji. The single thing that will happen for India by 2025 in terms of financial inclusion.
I think this is a tough question always to predict in a world where we live in fourth industrial revolution. The Moore's law takes over, and every prediction that anybody has ever made will come untrue in this scenario. But I personally feel that we have today close to about 700 million unique bank accounts in India. I would like to see every Indian having access to savings, investments, insurance, banking, of course, goes without saying. But the second part of it, the usage and the quality of it, becomes really universal. And we are seeing a lot of startups now offering shampoos, sachet size investment products, and you can invest from 100 rupees to same thing with insurance, micro insurance people talked about. But this has to, and credit then, and all these products, my wish list for 2025 would be that we have 100 unicorns in fintech and insurance tech and itself. And we have every Indian really truly banked and financially included. Which includes access to products in their own native language in a system that they can understand.
Great, thank you, sir. Nalin, you want to go next?
Yeah, I mean, too many ideas in my mind, but I'll try to bring it down into 3. Number one, I think while we are solving for the access, there are still large parts of the country, I believe, are completely out of the zone. Of the districts and states we see where a lot of this is picking up, we still the extreme far east of us, the extreme north east of us is still out of the zone, and I think we need to do more for that. It's not full inclusion till you have those boundaries and those sections also included. I know PADF has been formulated, again, a policy-led initiative. Kudos to RBI and the government to lead that. But I don't think it has really taken up. So I guess more needs to be done there. So that's one part. So it's a slow process, and that's why I'm looking at it as a 2025 target, not a 2023 target. But that needs to be solved for. That's number one in my mind. Number two, I think the payments data that we are creating, whether it's Aadhaar or UPI or cards or offline, whatever it is for the ecosystem to use, like I said, responsibly. But the only thing it may solve a little bit for is providing certain credit services, getting a little bit of more information on that merchant, on that customer, and saying, I know what your inventory size is, I know what you're buying, what you're selling. But I think there are some missing legs to it, and the missing legs to it will probably solve for what Arvindji spoke about on insurance, on some of the other financial services. Is, do I have certain amount of health related data about him? Do I have certain amount of non-financial data available about him? Because together all of that will come and help organizations to provide these services a little better than what they can do today. So I'm saying, while credit can still happen purely on the basis of payment data, but data on other other development aspects, whether it's on education or health or something else, also needs to come in. I know there's a lot happening on the health side, but imagine if I can club my health and wealth together, then insurance becomes very easy. So I just believe that those sectors need to come up to be able to provide these services. And I think number 3 is for us to, while the focus is India and there's so much to do here, but also start looking at what together as an ecosystem we've built to really make it a global and an embedded standard. Because unless you do that, your enablers are always going to be a pain point. You need to have the ability for phone manufacturers, system manufacturers, application providers to say this is an embedded service available to you, so that the enablement can be much faster. Today onboarding is a pain. You get more players, and you get the long lead time to get them to ready. So that enablement at an embedded level, I think is a certain target by 2025. So today you get certain things by default when you open up your phone. You get certain things by default when you open up your laptop. How can these services become by default services? I think these are the three key targets I would look at.
Right. Thanks, Nandan. Akash, you want to go next?
I think for me, I feel like by 2025, non-banks entities, especially fintech, will become primary interface owner for consumer and merchant services. Right? I think the collaboration between, as I said, banks and fintech have matured. And in the future, I see banking as a service too becoming bigger and bigger. And most of the banks will be, getting good revenue out of this offering themselves, right? I mean, they'll start being part of open banking initiative. They'll start sharing data, and they'll make entire banking as service accessible through APIs, which any fintech can go out in the market and distribute to their consumer base. That is the one largest and the most positive prediction I can see in the market. Right? There's things like Token that we are talking about right now, NBFC account aggregator. These things will also help us, proliferate the market and create a lot of new kind of companies. Right? That's very hard to imagine right now. But I think future, today banks compete a lot with fintech, just to put on the record, even though they are partnering, but they compete a lot. But I feel like that competition will reduce, and they'll partner more and more with fintechs, right? And try to use fintech as a kind of a face for a lot of these services. And obviously, banks will do a lot of heavy lifting in the back end in terms of building the infrastructure, building the layer. And fintechs will play the role of bringing more and more product innovation in the market, which they can iterate upon. They can take customer feedback faster. They can modify those products faster and work together as an ecosystem.
Great. Thanks, Akash. Mohit, your views?
So it's quite clear that I think we're on that cusp of prolonged and sustained growth. Over the last 4 years or 5 years itself, I think we've seen a 4 or 5x growth in pretty much every aspect of fintech, and I think that pace will in fact speed up, and that's super exciting for all of us. I think the single area which I think we all need to focus on is on training. When I say training, this is both of end customers on what is already available to them, and I think Nalin sort of alluded to that, but also internally is, do we have the right resourcing today to actually scale fintech and the pace of digitization? So I think here I feel that if this is done well, then not only will we see the 50 to 100 unicorns which Arvind spoke about, but a fintech company also actually helps to actually create that infrastructure for 20 other companies and other businesses to also take off. So for every large company which is out there, which is in any form of business, fintech is almost like an infrastructure backbone. So if you have 50 or 100 fintech unicorns, you're probably going to have 300 or 500 unicorns in other forms of business. So I think that's why this is so important. And I think for me, whether it is, I'm most concerned about just do we have the right manpower and do we have the right people with the skill sets, and I think that's it. If we can get that done, I think this growth is there, the infrastructure is there, the ecosystem is there, the desire is there, just that do we have the people for it.
Thanks, Mohit. So I will just conclude here. I think we've had a very interesting and engaging conversation. Specifically, we've said solving for trust is the single biggest issue that we need to solve. Access continues to be a bit of a challenge, but we do need to solve for that as well. I think using technology covering areas like solving for language barriers is another problem that we need to solve to get where we want to in terms of financial inclusion. Ecosystems coming together and creating use cases for specific ecosystems will help solve that problem. And finally, training and collaboration between banks and fintechs are key areas that I think the ecosystem needs to focus on going forward. So I think with that, we've largely concluded the views that we had. We have one question from the audience, and maybe anyone from this group can look to answer that. The question is specifically on using blockchain technology to build more confidence and trust. So if anyone from the group wants to take that up, Arvindji, I think you had alluded to it in an earlier point, but specifically on blockchain technology and trust.
Well, I think the tech startup entrepreneurs are there who probably know better on how they're solving it. But I can only give one brief comment. While blockchain is not a cure for everything, and that's something that many people think everything blockchain it, and then you either get a higher valuation or a good solution. I don't think so that applies really in the real world. But one thing that is definitely true, given the power of blockchain, trust definitely is, if it's a shared, trust is a shared commodity if you think about it. The application of blockchain to gain trust with multiple users with a decentralized approach is a lot more than a numbered few. So I don't know what the participant really wanted to know, but in general, if that's a very general question, it's a very general answer. The specific use case will have to be thought about, a specific application will have to be thought about, but in general, that's true. I mean, that's blockchain, at least in the matters of trust, is a good use case.
Thank you. Anyone would like to add?
No, I'll actually agree with Arvind. I think it depends on the use case. So for, say, a central bank digital currency, blockchain is not the answer, because there you're really going to go with, you're not going to go with the distributed ledger. But if it comes to, say, international remittances, then blockchain can be quite useful, even if there are 2 or 3 multiple entities, simply because instantaneous transfer of information, ensuring that there is no counterparty risk. And there are interesting use cases out there which can be done. But so blockchain is not the answer for everything, but there'll be many things, especially when it comes to across borders in systems or places where we are not entirely sure about who is responsible for something. Then having a larger group of people having access to that same information becomes more interesting. So in land records, for example, where you really want to ensure that you've got everybody's got access to it and that information cannot be changed easily, because that's a trust issue. That might be useful. But there are many other, but that could easily be done in a different form factor also. So I won't say it's the only answer. It depends on the situation really.
Right. I think we've got our answer to that question. I think we can look to conclude our session now. Thank you, panelists. I think we had a great discussion. Over to you, Samriddhi.
Thank you very much, Geetika, and it was indeed a very, very interesting session. Thank you once again to all of our panelists for sharing with us your expertise and those valuable insights. With that, we are now going to conclude this panel discussion. Thank you once again. We move on now to our next segment, which is a keynote address by Shri Saurabh Mishra, the Honorable Joint Secretary, Department of Financial Services, Government of India. And without any ado, I am going to...
He's joining in 2 minutes. He's just joining.
Yeah, so I've been told that Mr. Mishra will be joining us in just a few moments. I request all of our audience to stay with us. Department of Financial Services, Government of India, the Honorable Joint Secretary, Mr. Saurabh Mishra, will be us in the next 2 minutes. And please bear with us. And we are going to hear from him. It is the keynote address in just a few moments from now. So, ladies and gentlemen, we are being joined by our next speaker, Shri Saurabh Mishra, the Joint Secretary, Department of Financial Services, Government of India, in just a few moments from now. We request you to kindly stay with us.
Good
And here he is. Good afternoon. Hello, Mr. Mishra, and I'm going to hand it over to you now for the keynote address. Welcome to our today's program.
Thank you so much, and compliments to ASSOCHAM for organizing this extremely important and relevant area in which we are doing this kind of interaction today. So Fintech obviously has got applications which is cutting across the entire sector and the industry. The moment we think about Fintech, we obviously talk about innovation, we talk about speed, we talk about resilience, and we talk about penetration. The topic that has been set aside is future of Fintech and payments to drive financial inclusiveness. And what I'll try and do is to possibly try and cover up the future of Fintech into a RegTech environment or a cashless environment. My sense, the way I see it, is that amalgamation of technology with the financial services as such is revolutionizing the entire user experience. Be it the customer side of it, be it the provider side of it, or be it the regulator side of it. And hence, the umbrella of Fintech is really connecting itself to the application of tech to foster innovation and enhance or automate the financial services and the processes. We must admit here that the pace at which the Fintech industry is reshaping the financial sector is something which is absolutely breathtaking. We can evidence it by a myriad of examples. Possibly one of the things that we can talk about is the adoption rate. India's Fintech adoption rate, as we all know, is way above the global average, which is at 64. We are at 87%. So this is a broad backdrop with which we are embracing and allowing Fintech to really create a new India or a new digital India. In these applications, there is no real limit. It cuts across almost each industry, each geography, each market, and each business model. And therefore, if you have to take a step further, Fintech itself will keep branching off into a variety of Fintechs, from RegTech to InvestTech to Wealth Tech to Credit Tech, and so on, to the Payment Tech. RegTech, as we understand, is the technology and the Fintech applications being adopted into the regulatory side of it, which is obviously emerging as a niche Fintech segment and having its use case technologies like cloud and open data models, artificial intelligence, and machine learning, of course. All of them are getting kind of progressively experimented, explored, and adopted. And they are therefore enhancing the regulatory process, meeting ongoing requirements of the compliance. Just to apprise you of what we are talking about in terms of the way whole piece turns out, or what RegTech carries as a gravitas or a weight. PwC had done some study last year, and some of the factors were that around 10 to 15% of the workforce is currently dedicated to the regulatory compliances. The other part of the analyst report is that around 90% of the time is spent across financial services organizations on data collections and organizing it, vis-a-vis the 10% alone, which is about the data analysis, assessment, and trying to find some meaningful outcomes out of it. Global spend on the compliance and regulatory side is over $270 billion. And around 500% volume of reg change or a regulatory change was witnessed between the year 2008 to 15 itself. So stack this out with the thought that we are discussing here of why and how the regulatory tech is becoming increasingly intrinsic and important to the way we will conduct businesses across Fintech, including payment, including the other applications that I just spoke to you about. What kind of services it can include? Again, a broad range which we can think about. Risk management protocols are being tried around it, controls to actively mitigate the risk, updation with the global regulatory environment, including India, checks against the daily regulatory alerts, and of course the compliances that are KYC or AML or CTF compliances with the customized solution that it can generate. So mind the fact that the reg compliance doesn't really limit itself to a regulator adopting it, but it cuts across as a whole ecosystem with which we are talking about a whole new way of doing the transaction, which is almost upfront in its compliance orientation or in its delivery or outcomes of the results. So I think that is where we see the whole RegTech piece. Having a word on the cashless side or the payment side of it, I think one of the biggest revolution that we've all seen, friends, is about what happened with Pradhan Mantri Jan Dhan Yojana, PMJDY. Around 41 crores, that is 410 million accounts, which were kind of opened up into this entire period, something which not just India but the world had never seen it. So I think this is nothing but the tech application towards the financial inclusion side. Pandemic has obviously, as we know, has accelerated the pace of adoption of the entire cashless economy, not just at the level of demonetization, which was a landmark event, but also from there onwards, I don't think it has ever looked back. And in all likelihood, it is an irreversible process with which we have seen adopted and embraced cashless in our systems. UPI transactions, all of us know that really have gone to a new value. It has trebled between 2019 and 2021. Our 2 lakh crore of a 19 end to a 6 lakh crore, and it is just a mid of July that we are talking about. So the sense is that the innovation into each part of the fintech, including the payment fintech and the cashless economy, is going to be the way in which the India next, or the payment next, or the tech next, or the financial next will. MSME sector is another big area in which lots and lots of experiments are on. As we speak, we've been collaborating with MSME and IDRBT onto something which is a platform fintech for the MSME side through the blockchain side of it, so that the transactions are seamless, they are reputation proof, and of course they are having no trust element in between, so they are trustless to the technology itself. Many such things are going around. We have been experimenting with the first 5G lab, which is going to be the pilot lab. And once the experiments are up in terms of its outcomes, which we are doing with a series of shortlisted banks and other institutions, I think we will have something to look forward to, not just the entry of fintech at the process level or at the algorithm level, but also at the technology levels or at the machine levels as well, which is where the 5G clearly unravels its opportunities and its potential into a new environment. Last but not the least, I do believe that the creation of e-government place, which is a marketplace, along with the Make in India program, all of it is having a huge dependence, including the ease of doing business part of it, or reaching to a kind of $1 trillion of economic value of digital economy by 2025. I think each part of it, and I think there are 10 other examples which I may not take here, is underpinned by the fact that we are irreversible, a decisive, a committed digital as an economy, both across the RegTech side of it, payment side of it, or the overall digital economy side of it. So I think broadly, this is what I thought I should share it out to be fitting into the overall environment in which we are discussing it out. And my sense is some of the leaders who are driving digital or fintech or the compliance sides of it or the other applications of the fintech would agree with me that this is the time which we had never seen as a country. And hence, we should try and collaborate and bring all our forces together at the industry side, at the regulatory side, as well as at the legislative side, in order to become something which is absolutely irrevocable, irreversible, the mightiest digital power in the world. Thank you.
Well, thank you very much, Mr. Mishra, for joining us this afternoon, sparing some of your most valuable time and sharing with us your thoughts. We thank you once again for joining us on our today's program. And for all of our audiences, I'd like to tell you that we are also joined by Shri Ajit Pai, who is a distinguished expert from the Niti Aayog. And we'd like to come to you now, Mr. Pai, so you could share your thoughts with us. Welcome to the program today. Good afternoon.
Good afternoon, Samriddhi, and thank you for having me on board, and thank you also for ASSOCHAM and for organizing this event on something that I consider very, very critical for India's growth. And just to give some color on the manner in which we at Niti Aayog are looking at this, of course, I have to sort of forewarn that by saying that a lot of the opinions that I'll present are personal. They don't necessarily represent that of Niti Aayog. But a lot of the work that we do over here, and why we are looking at digital payments, and particularly not just digital payments, but why we are looking at the AI and big data and other sort of disruptive technologies, why we think they're going to be very critical to the economy going forward. So first of all, let's just look at the past decade for financial services in India. And what we find over the past decade is that the overall growth rate of the economy has slowed, quite a bit. A large part of this slowdown was linked, I think, to the cleanup of the financial system. If you look at credit in India back in 2010, 2011, the growth in credit from the scheduled commercial banks in India, which is about 90% of the credit system back then, was in the mid-20s. So any growth that is higher than nominal GDP growth is highly accretive to GDP growth. But as we saw, due to either overexposure to certain sectors, overcapitalization of certain sectors, some people even talk about phone banking, there was a lot of NPAs that got created. And gradually we watched a deceleration in overall credit growth down to mid-single digits today. So today the banking system overall, all the scheduled commercial banks, are seeing deposit growth in double digits or close to double digits. And we are seeing credit growth that is right now in mid-single digits. And mid-single digits nominally is actually even lower than inflation. So with the 5% or 4% or 5.5% is about inflation, which means that basically we are seeing no credit growth. And that is a huge setback to economic growth in our country. What we require is much more rapid growth to support credit growth, to support the GDP growth of our country. So the single biggest reason I would say for the economic slowdown even prior to COVID was credit growth in this country. Now, when we look at that problem and we also understand the NPAs, all of that, there were lots of positive things that happened already that actually lay the foundations for not just digital payments, but also of formalization of the economy, acceleration of people entering financial inclusion within the economy. You've seen the Jan Dhan program, with over 500 million accounts attached. Now, what all of this data did was actually create sort of a broad foundation for what the government or the country could now achieve, which is that it created a stream of data that allowed us to start seeing what behavior and patterns were outside of the traditional credit rating agencies or the traditional way that banks looked at lending, which was looking at financials, 3 years financials, all of that. And this data sort of allowed the new breed of people that can enable credit by scoring, the credit scoring agencies, to start taking off in India. We are talking about the TransUnions, the Experian, the Equifaxes, and their Indian equivalents today, where you could actually measure the kind of data that was available and see what the consumer behavior was. Now, this has actually been accelerated a lot, not just by the sort of the JAM Trinity, the Jan Dhan, Aadhaar, all of that, which has suddenly brought a lot of these people into the fold, but also by the rapid growth of the digital payments. Because if you look at cash flow based lending that SBI and many of our other large public sector banks are focusing on, basically they're looking at cash flows to be driving lending rather than asset-backed lending that was traditional. So we are looking at creating this there's this sea of data that is being created by digital payments that are accelerating right now, of course, mainly small transaction, but those are the ones that need the credit the most. But also as you rise up and you look at larger and larger transactions, you are going to see as things go electronic, we are going to find a new basis for doing this. But unfortunately, while all of this massive foundation building had been done by the government, lots of these, lots of this data that had become available, and the TransUnions, the Equifaxes, Experian, Civils, whatever your these agencies could provide you with data, there was a very sort of what I would call a serious sort of reset. And what was that serious reset? That was COVID. And what COVID did is that it interrupted not just businesses that were bad businesses and would have gone out naturally. It not just sort of created interruptions in the people, in the accounts of people that were unreliable and were spotty in paying their debts, but it also created a lot of issues for people that actually would want to make their payments and would have made their payments, but couldn't for various reasons. Might be that they were dependent on interest, and suddenly there was a moratorium or a rental where the tenant wasn't paying, etc. But across the country, we saw a fairly significant reset on what happened in terms of credit predictability. And it became a huge challenge, which I'm wondering whether the big data people and the people that are looking at AI can actually look at the sea of data and see whether we can actually be able to separate the reset that happened because of malified intent or because of bad business models from those that are good. So one of the challenges that we are seeing with the scheduled commercial banking system and the whole credit architecture in India right now is that we are not able to discern what happened because of bad intention, what happened because of a bad business, and what happened because of COVID, right? It's just a clean interruption. Now, these are the kind of challenges I wanted to bring to this forum as you discuss and go ahead with looking at, what can happen, just looking at the composition of the panelists. I thought that these are areas that we can reach out to all of you and see whether there are solutions that we can take. India has one of the lowest in the G20, one of the lowest private credit to GDP ratios. Our credit growth has decelerated in 10 years. My math tells me that India's GDP would have been growing 500 basis points faster every year for the past 10 years if the credit system was working. So now that we are enabled with so much more digital information, that we have all the foundation building done by the government, we have so much of this done. Whether a big reset like a COVID, which has impacted those with bad intentions, good businesses, bad businesses, everyone alike, whether there's some way that, given all that we have, the amount of progress that we have made, whether we can actually figure out a way to start accelerating credit across this, across the various platforms, whether they are fintechs, whether they are piggybacking off neobanks that are working with existing banks. The banks, as I already mentioned, have lots of credit, have lots of deposits. They've been growing in double digits. Can we get the banks to start disintermediating much faster again, making these loans much faster, but not bad debt again, as has happened historically because of high concentration, all of that, but debt because now we have the capacity to be able to screen the borrowers much better, be able to lend this money out so that our NPAs are actually much lower. And a lot of this, I think, is going to come from some of the new techniques, some of the sort of the digital transformation that's happened across this country, whether it's the Jan Dhan, whether it's mobility, whether it's financial inclusion of, whether it's the credit scoring, whether it's all the, so many records and transactions that are going digital even outside of the regular payments area. But it is going to begin, I think, a lot of this data is linked to the payment state, the payment marketplace, because that's what's actually driving a lot of the data that is being collected at the consumer level, even at the enterprise level, and now even at the bank to bank, business to business, enterprise to enterprise transaction level. So that is my hope for seeing whether we can see some of these solutions come out from whether it's the small finance banks, whether it's the neo banks, whether it's the data that comes from the payment folks that can act as neobanks with the, that can actually enable our regular scheduled commercial banks to be accelerating their lending. And that is where I'm hoping that a lot of this new sea of data can, be utilized by asking the right questions. When you look at AI, you look at big data, it's not just, buzzwords to be used, for just saying that, okay, we have all of this, but how do we actually ask the right questions to be able to affect, much more effective, credit dispersal, which right now happens to be one of the biggest challenges that this country has been facing for much longer than just the COVID period, for the past 2-3 years, especially, after we have had this huge reset where it's difficult to discern the good from the bad, or the, I shouldn't say good from the bad, but the credit worthy from the uncredit worthy, because we want to make sure that, in this nation, while we might want everyone to get access to credit, we want to make sure that the most creditworthy get it first, so that the economy is more resilient, it is more stable, and it grows, much faster. So I know that it's a particularly short address. I started early and I'm finishing early, but I will stop with that. And I look forward to hearing the deliberations and listening to this session more closely. Thank you.
Thank you very much, Mr. Pai. And it was indeed a comprehensive address. Thank you once again. With that, I'm going to now move on to our next segment, which is once again a panel discussion. And this time we have Mr. Aseem Parashar, who's partner digital transformations with PwC India, to take this session forward. Mr. Vaibhav Joshi, the Chief Digital Officer with Equitas Small Finance Bank Limited. Ms. Monica Jesuya, the Head of Product Management, Mobile Financial Solutions, Mahindra Comviva. And Mr. Gautam Kaushik, Group President, BharatPay, will be sharing with us their views in this panel discussion, which will be moderated by Mr. Aseem Parashar. So over to you,
also welcome Mr. Ashutosh Chadha, Director and Country Head, Gov Affairs and Public Policy at Microsoft, who also joined the session.
Yeah.
Over to you, Aseemji.
Yeah, thank you, Samriddhi, and thank you, Arun. A very good afternoon to all the audience, and also a very good thanks to Mr. Ajit Pai for setting the context for this session. And I would like to welcome our illustrious panelists. They are all hands-on practitioners in the industry. They have done it. They have seen the growth. They have seen how the industry has changed. And also, I would like to welcome Mr. Ashutosh Chadha, because he is from the policy and public affairs side of it, and have been working with the various technology companies throughout his career for 3 decades. Now, without waiting for that, let us get into the deliberations of it. And there are a lot of questions that have been kind of set up, that the credit has been decelerating. Everyone talks about the data. So there is a lot of data, but where are the insights? So those are the questions which are being asked. From the public policy side of it, RBI has come up with the account aggregator. We are seeing a lot of new banks coming in, and different kind of models are evolving in the market. So let me just first go to Mr. Chadha, and I would start with the first thing which has been doing the rounds of all the discussions and at the policy level, that there have been promises and predictions about the blockchain technology and transforming the digital payments landscape, both in domestic and global markets. The question that is being asked everywhere, has it delivered, or is still a long way to go? Now, with RBI also planning to come up with some guideline or regulation on the CBDC, and most of the central banks are thinking about it. What is the future? How do you see this technology? What is the kind of impact that you see, or is it just a hype and it has different utilities in different industry segments? Mr. Chadha, you are on mute, please.
Can you hear me now?
Yes, sir.
Okay, thanks, Aseem. Thanks for that question. The fortunate or unfortunate thing about technology is you really can't predict where it will go, right? I mean, you always hear about those predictions so many years ago that there will never be a market for personal computers, right? And now we have God knows how many. But you raised a good point as far as blockchain is concerned, right? And let's look at let's look at it from 2 perspectives. Why, one is there is obviously the prediction by the World Economic Forum that by 2025, 10% of global GDP will utilize blockchains or blockchain-related technology and all of that stuff, right? But the question is, why will companies start choosing blockchain? Fundamentally because of the security that they provide, the processing fees, the speeds, and the fact that false positives and all of those issues which come up, which delay your trust, go away because of that. And hence it enables digital commerce as we know of it today, right? And fundamentally, because of the way blockchain is structured as a concept, it makes it hard to falsify, transactions. Having said that, I think the there is a flip side to this entire conversation, Asim, and that flip side is that does everybody know completely in and out how will they apply blockchain or crypto in their daily lives, right? And I'm saying I'm using daily lives in a very large concept over here, but I'm saying from your way that you're going to be running digital commerce, right? And the reason being that today you still don't have a common nomenclature or a taxonomy or regulations across the globe around blockchain. There are directions which are there, but there aren't unified directions, right? Especially if it's got to become something which is completely public. Yes, you have private ledger technologies which are possibly more successful, and the reason why they're more successful is because they're more controlled. But when you move to public ledger technologies, right, which are either controlled or where the government gets involved, right, you need a whole lot of other guardrails to ensure that things are happening the way it is. And I think that connection still hasn't happened. Personally, I do believe blockchain as a concept is here to stay, right? It still has to cross the hump where it basically becomes something which becomes a utility, the way the internet is a utility today, even in governance services. Of course, not in all countries, but in many countries, right? So that would be my short take on blockchain. And again, with a caveat, I don't want to be a soothsayer in this case.
Sure, I understand that, and we have been following. Now, there have been utilities for this, like in one of the state government, from birth to death, the whole citizen life cycle is now being built on blockchain, etc. So there are use cases which have been successful. But now let me move to Monica, because she has been at the forefront of working in PayPal and seeing the transformation in MasterCard and now in Comviva. From the payment industry perspective, Monica, how do you see this whole blockchain or the crypto, they are used synonymically, and how it is going to change or have an impact? Or, for example, like in remittances business, it's a big business for a lot of players globally. How it is going to impact them? Is it going to provide cost-effective services to clients or customers, or how much time will it take? So those are some of the deliberations which most of our audience would like to understand and hear.
So first of all, thank you to ASSOCHAM and of course to Asim for this wonderful question. Couple of things that stand out as far as blockchain is concerned is to step back a little bit in time and really ask, what was blockchain solving? It was always a problem looking for a solution until this SDG goal came up, which was about reducing inequality all across the world. And countries, especially G20 countries, have actually committed to a goal to reduce this inequality by reducing the cost of remittances that happen because a lot of economies are dependent on this remittance corridor to power their GDP. Now, if you ask me how is tech helping solve this problem and whether blockchain is the answer is tech democratization, which has happened with so many fintechs and digital payment players coming together to help revolutionize and help bridge this gap was already happening. So what has blockchain essentially done is to create a cryptocurrency related use case that has suddenly become absolutely critical to not just the remittance use case, but also the ability to be able to get rid of intermediaries. Now, everything comes with a pro and con. To say that blockchain is essentially going to be a leveler, which is going to alleviate all these issues, is probably being short-sighted in the short term and being extremely bullish on the long term. The reason I say this is because of compliances and regulatory guidance and guardrails, as Ashutosh just mentioned, were not to be there in many of these use cases, the world economy wouldn't function as it is right now. Now, I completely agree that we have to be able to get rid of certain inefficiencies in the system, the cost arbitrage that a lot of intermediaries play on, but the answer to that cannot be by removing all centralized systems and to be decentralizing all such information and therefore payments that are continuously happening, which basically countries are dependent on. I'm absolutely bullish on the future, but I don't think that blockchain is the answer, an ephemeral answer to every problem that aches and pains the payment systems today. Now, as far as blockchain acceptance is concerned, all across the world, blockchain is actually being regulated, starting with America, in which about 20 plus states are regulating blockchain. So we have to understand that guardrails being put in place is probably a positive sign for the ecosystem at large to not only participate, but to be able to help extend the ecosystem. And from the India context, the Indian banks are actually working together and supporting a consortium to help the blockchain example and adopting a pilot for letter of credit. So I think this is going to go a long way, but whether it solves the problem today, the answer is partly. Whether it will solve problems tomorrow, the answer is of course it will, because a lot of technology always revolutionizes the things that exist today.
No, thank you, Monica, because you brought a very interesting point out there, that the reduction of inequality, which is a very different perspective when we talk about blockchain. So thanks for that insight. And also the regulations that are coming in. But now let me take it forward to Gautam, being CFO in American Express, and then setting up Payback, and then again in Bharat Pay. So Gautam, from your perspective, how do you see blockchain helping in this whole transition? Because till now I have still got a guarded answer from both the panelists. So let me just kind of explore if there is something on the either of the spectrum. So over to you, Gautam. Sorry, you are on mute, Gautam.
Gautam, you are on mute.
Yeah.
Sorry. Well, thanks, Asim, for putting that question to me, and thanks for inviting me to this panel. I think I've heard some of the panelists, and they made very valid points, right? I think we tend to over-predict the applicability or the effect any technology is going to have in the near term, right? I think all of us believe that blockchain is here to stay. And if we start actually separating blockchain from crypto, right, which is just an application of blockchain, and look at as to how blockchain per se can revolutionize the payment industry, I think there are several applications. But I'll be the last person to say that like it's something that can actually further empower domestic remittances, right? We have seen several, I would say, revolutions in this country already, right? With UPI being at the forefront of it all. And I think what it has done already is decentralize payments to a large extent, right? It's actually brought in a lot of efficiency in terms of how payments are being done. It's brought in a lot of efficiency in terms of how digital adoption has just actually taken several, I would say, leaps, right? And Bharat Pay has been at the forefront of it, and we have experienced it firsthand. So I think if I were to start looking at what's the problem that a blockchain solution could be looking to solve, right? Being firmly, I would say, focused on the payment industry. I think Monica pointed out that cross-border remittances is something that could be looked at, because that is still something which is significantly inefficient, right? There are a number of, I would say, intermediaries which play a role, and there is a lot of margin which gets lost in terms of like how money gets remitted from one part of the world to the other, right? The other place where I can see blockchain playing a role is going to be digital identity, right? All of us struggle with KYCs, and it's a necessary evil of actually doing business, right? I think we have to ensure that the customer that we are onboarding is the customer that we want to do business with, and is actually getting onboarded for the right reasons, right? So there is a lot of cost, there's a lot of inefficiency still in terms of how digital identity, let's say, validation happens, right? And I think given the fact that like it's a decentralized ledger when it comes to blockchain and has all those security aspects built in, I think I would be very excited to see what kind of innovations come in the industry when it comes to digital KYC, right? The other one is smart contracts, which I'm sure like the industry is adopting in a measured way. Again, we don't see everyone jumping on board because people have invested in technologies over the last 10-15 years. So there's a significant investment which has gone in terms of either moving stuff to, let's say, the data cloud infrastructure, or actually onboarding with several SaaS platforms. And now I think people want to just see whether blockchain per se or the use cases are going past some of those critical thresholds beyond which like it becomes efficient for the network, right? Because I may have a system which is still running at like a N-2 or an N-3 version when it comes to the latest technology which is out there, and I wouldn't want to invest till the overall infrastructure is ready for it, right? So I think it will require some bit of a nudge, right? I think, for example, we have several examples in this country already where the government has taken a lead in terms of defining what the use cases could be like, defining what like a futuristic platform could look like, and the industry has followed that with equal gusto. And we have seen businesses mushroom overnight and deliver that revolution, right? So I think we'll have to see that come through. It's still at a stage where governments are still trying to assess what the change could be that blockchain might bring into, let's say, not just the financial aspects of how we conduct our lives, but it's also, as Monica pointed out, the socio-economic angle to it, right? As to what really happens in the society if you just like bring down the walls and make everything decentralized. So I think that's one area that we'll have to be looking at with a measured lens, and then hopefully there are things which will come out which will continue to revolutionize not just the fintech industry but the others as well.
Thanks, Gautam, because that's one part you said, that nudge to the industry, and where industry and regulators and government can come together to take it forward and identify use cases which can be useful for the society at large. Now let's move to the next aspect of it, in which we also talk, and Mr. Pai was also talking about, the big data. So we have huge amount of data, and we always say about that. So we have seen that data is available, but how it is being converted into insights or information, that is, there is a huge gap. If you look at the banks, etc., they are sitting on gold mine of data. Huge amount of transaction data, huge amount of customer data, but still I think it has not been used in a manner which it should have been. And talking about credit, etc., how we can extend on both on structured and unstructured data. So now let me move to Monica, over to you. So big data and AI are being used extensively in digital payments to drive insights, manage frauds, increase STP, and also now being used in credit underwriting. But what have been the top 3 use cases which has provided maximum benefits in your viewpoint?
I think the first and most important part of any digital payments transformation and any technology use is always the consumer, and whether consumers are being directly impacted. So that has already started happening with so much gamification happening that the activity rates of consumers is now being looked at as a serious valuation criteria for not just startups and fintechs operating in the space, but also for the ability to be able to create an entire ecosystem around it. So consumers are probably the biggest beneficiaries and the most impacted in order to make payments an everyday part of our existence instead of just one of those anchor use cases that drive certain other apps. That is definitely one. Second is, of course, the rise in BNPL and buy now, pay later activities, which currently demands the maximum amount of funding dollars all across the world. The reason for this is the use of to be able to not just understand what consumers are doing, but what their behavior patterns are showing us. And third, and but not the least, is the use of data now in account aggregation and other frameworks just got launched last week. Very, very essential, because data has always existed. Data is the new oil, we've been hearing it, but data is also equally useless if it is not accounted for in terms of actual knowledge that we can derive from what it is that the users are doing with the data. Everybody sits on a gold mine, but if it does nothing for you, then it's not really business value. Now, as far as open banking and all these new buzzwords that you are thinking and you're hearing of, all of them are based on data and the ability to be able to have maybe a consent layer, which may or may not exist in certain countries. In India, of course, now we do have a consent layer available, but the question and the ability to really not only just monetize the data, but seek user consent in order to be able to drive certain activities. So I feel that this is actually going to be the start. Instead of unscrupulous use of data that we've seen over the last many decades, we'll probably see consumers accepting that data is an important value parameter for not just themselves, but something that they can earn out of. And these use cases, specifically in frontline digital payments, which are definitely going to take off.
Thank you, Monica. And you talked about a couple of new products, consumer at the center, and also the consent coming in. So now let me move on the policy side of it to Mr. Ashutosh. So sir, the question is that, yeah, there is data, there is a consent piece regulation is coming in, but still this data belongs to the customer or the financial service provider. And yes, he will get certain benefits, which is again dependent on the financial service provider. What is your viewpoint on this, that how much should it be leveraged, or how much stake should the customer has in this giving the consent on this part of it? Because the digital education level of all the consumers are not at the same level. If you look at the urban, and in urban itself also you have different sets of customer segments and their maturity level is different. And on consent, we always used to sign on terms and conditions in finer prints, right? We never used to read that aspect of it. But here you are going to do behavioral profiling and all those kind of aspects will be coming. So what is your viewpoint from your experience of working domestically and globally with a lot of these players? That would be really interesting for the audience to hear.
Thanks, Aseem. I mean, that's a very important question. And I'd actually like to step back to one very important aspect. I mean, Monica did touch upon it, saying that data is the new oil, right? But let's also remember that oil lying in the ground has no utility unless it's processed and it flows from one place to the other, right? If all the oil was still residing in Saudi Arabia or Nigeria or wherever it was, we'll still be, possibly on bullock carts, right? So like that, data is only useful as much as you process it and leverage it. But that's where it ends, right? Because the point that you made is extremely important, which is who owns that data? And I think, yes, you're right, Aseem, we do have, we have in India, which is, let's just focus on India for a minute, right? We have in India, which is what many people call the developed India or the first world India. We have the middle India, which is developing, and we have the underdeveloped India, right? Or it's actually an India that we don't know about, right? But let's go back in technology. It was always there with technology. Any technology that you bring into any country or any region, you'll always have the first adopters, the next, the people who will then follow, and then the laggards, right? The point is, should we prevent technology's benefits because there is such a large divide, or should we find the right policy balance to ensure that the large population doesn't get left behind? And I think, to Mr. Pai's point, where you're talking about future technologies like data analysis and machine learning on AI, etc. In fact, the population which gains the maximum here today is actually the population at the bottom of the pyramid. People like you and me, and sorry for using this analogy, have access, right? And I'll give you a simple example. When you talk about data being used for credit worthiness, my son was supposed to start up something in Delhi a few months ago, just fresh out of college. He wanted a loan. He couldn't get a loan, but I could get a loan because I had many bankers coming after me for whatever reason, right? We have the access, but it's not the people at the bottom of the pyramid who have that access. So now when I come to your specific question, right, I think the ownership of data, the control of that data, at least the personal data, needs to completely reside with the individual. You own that data, you control that data, plus you have the right to also stop somebody from using that data. These are three fundamentals that you should go about. The other thing that we also need to take away is that unlike oil, data does not get exhausted. I can give you my data to use. I can give another company my data to use, right? The point is, are you misusing it? So that's where the guardrails or the rules and regulatory intervention needs to come in, right? And as far as the education level is concerned, I do understand this concept that we will be afraid of the fact that there'll be a lot of people who don't understand how their data is going to be anonymized, used, not used, etc. But then I firmly believe in human resilience and the ability of humans to adapt to stuff, right? Who would have ever thought that today a person sitting in a small village far out would actually be using technology to sell his or her local handicraft to somebody in the United States? Forget about somebody sitting in a metro like Delhi or Bombay, right? So I think we need to, we are sort of short, in my opinion, and possibly I'm being very altruistic about this, but I think we are giving the human ingenuity and human understanding, right? We are shortchanging them at that point of time. Yes, there are risks, but that's what the state and the industry need to come together to build that trust. And I think that's the most important piece. And that's where technology, AI, and all of this can actually also come in picture. How do you make sure digital commerce, digital transactions are trustworthy by using these technologies? So yes, data is important, but ownership and control of data is equally important. But more important than that is ensuring that people have the right to know that what is their control or their ability to control data.
No, thank you, and I agree that the trust part of it, where the industry and the regulator also have to come together, and your faith on the human resilience, that it will be able to overcome all the negatives of this aspect of it. So that's really, I would say, I am also kind of hoping on that aspect of it. But again, industry drives in a different manner. So now let me come to Gautam. And Gautam, we have been talking about data, and being in the consulting industry, whenever I talk to CEO and CXOs, everywhere, any problem, AI ML will solve this, right? And you talk to anybody, any of the reporter from any institution, my daughters are also they are studying in school in 9th and 10th, and everybody talks AI ML. So coming to you, being a practitioner, is really AI ML a solution to all the problems, and especially in the payment industry, or we are just trying to hype it, or it is just a tool? Let's just agree on that. So what do you got on?
Yeah, thanks, Ajit. So I'm not going to get into the specifics of data ownership. I think it's been covered really well by Ashutosh, right? What I'll cover is whether data or the usage of it or the technologies which are available, specifically AI, ML, are they overhyped? Well, from my perspective, if you ask me, like even if a simple SQL code is able to actually get the problem solved, that to me is worth its weight in gold vis-a-vis, let's say, any super smart AI, ML code that's been given to me for a specific problem, right? I think for me, the core objective of data is to create a flywheel, right, for any organization. If the data is able to create that flywheel for you, then actually you are being successful in how you look at data, how you analyze data, and then how you're able to deploy those insights into improving the customer experience, right? If the data is not focused, or if you're not focusing your analytics in terms of improving the customer experience, then I think there is something which is wrong somewhere. So what I tell at least the data practitioners in my company is look at the margins at which we are operating, right? Look at the boundaries and be always cognizant of where those boundaries are, right? And be always testing on those margins, right? The question I ask is like, what's the velocity at which we are testing our hypotheses, right? How many tests are we running, right? We might have all the data in the world, but if we are not torturing the data, it's not going to yield much to us, right? So the onus is on us, right? If you ask anyone, do you need more data? The answer is always going to be yes, right? But then what is the incremental benefit of being able to get that data in the business that you're running? I think that's the question that is seldom answered, right? So if we look at like how we leverage data, at least in the company that we are proud to be part of, it's basically to be able to improve the velocity of transactions that we are driving day in and day out, to be able to reduce the failure rates that we see in those transactions actually going through, right? We believe at BharatPay that the core business in fintech is to be able to lend, right? Credit is the business when it comes to fintech. And if I'm not able to drive credit to a large number of the customers that I'm here to serve, then I'm actually failing in that objective, right? So one of the first, I would say, applications for us when it came to data was to look at failure rates, right? UPI was still something which was in its early days, right? You were still seeing, because the banks were still catching up in terms of the infra that they have to be able to support UPI. And we wanted to ensure that the merchants, the small to medium enterprises that we are serving, they are not actually bearing the brunt of failed transactions, right? So one of the first applications of data that we had was to be able to assess like which transactions are likely to fail, and then to be able to route those transactions accordingly, which led to a higher success rate. Because if you're able to deliver a consistent experience to your customers, that's the first step towards building trust, right? So how do we create a delta in terms of what the industry success rates are when it comes to UPI versus like at BharatPay, what's the success rate of transactions that we are able to deliver to the merchants? And that's where you build trust. That also ensures that the merchant is always going to be welcoming payments on the BharatPay platform. And that's where the flywheel kicks in, right? Because once you have more and more transactions coming in, once you have more and more merchants posing that trust in the system that has been placed, it gives you a lot of transactional data insights, right? Which can then be used for underwriting those merchants for credit. So I'm not saying that, okay, you divulge all the information. I'm not the one who's saying like, you give me the data of the last 3 years of business that you've been doing. Because I don't believe that the merchant is going to trust me with that data, right? I have to first build that trust. I have to ensure that whatever data is being channeled through me by the merchant is being put to use to be able to serve that customer better. So we have grown 10x in terms of transactions, right? We are doing 500,000 transactions an hour right now, and all that transaction data is being used to be able to underwrite those merchants for small ticket loans, which a bank may find inefficient to be able to underwrite at that ticket size to these small merchants. But I think it becomes quite profitable for us because we're able to do that with efficiency. We are able to do that at scale. So the applicability of data in this scenario is going to be, how do I underwrite those merchants for a loan based on the transactional data that I've seen, right? Which is basically, are they consistent in terms of the transactions which are happening? Are they having customers who come in regularly and transact with them, right? So are they building loyalty with those customers? Because if you have a loyal set of customers, that's the hallmark of a good business, right? And a good business is something that we would definitely want to have as part of our asset book. So we'll be more than happy to underwrite loans for those merchants. So there are like these applications that are very core to the business that we run. And the data is actually then used to be able to drive further benefits to the set of merchants that we have in our ecosystem. I'll just take a pause there.
No, sure, Gautam, thanks. And again, there is a consistent theme, trust building with the customers. You talked about loyalty of the customer to help to build a good business. And do I really need all sets of data or a set of data just to arrive at a decision? So these are some of the consistent themes that we are getting in. Now, I will just extend this and I will ask you a follow-on questions on this. So we are seeing a lot of disruptive technologies which are coming. Now, what should be the operating model used by digital payment companies or fintechs? Because we have fintechs, account aggregator, neo bank, small finance bank, payment bank, and I don't know how many nomenclatures will keep on coming in different forms or the other. There are loyalty program organizations also coming in. So how do you kind of handle the rate of change in the disruptions that is happening in the technology space? Now, people are talking about edge computing, quantum computing, and so many things are coming in, and it will keep on coming. And you have limited set of money to invest or capital to invest because you have to lend, you have to focus on the credit side of it, etc. So how do you kind of gear up? What should be the operating models for these organizations to work as they go along in this disruptive environment?
Yeah, so I think if I were to sort of keep things simple, right, I think what one needs to clearly understand are the needs of their customers, right? I think the fundamental challenge for fintech in this country is how do you solve for distribution, right? And what I mean by distribution is distribution of credit, right? To be able to cast a much wider net than is currently possible, which means that like look at alternate models. Which bring a larger number of customers into the credit ambit, and also be able to do that efficiently, right? Because at the end of the day, any inefficiency in the way you underwrite, in the way you onboard, in the way you run your operations would have to be passed to the customer, right? So if I have to be if I have to enable myself to be able to offer the most efficient solution, I think the clear focus for me is going to be how do I expand credit? And I think any technology that will be adopted would have to actually solve for those fundamental questions, right? So it's a lens that you adopt, which is basically it's not a technology driven lens. Okay, like there is AI ML and hence I have to adopt it just because like I have the sword, I have to use it. I think that's not how like the practitioners need to look at it. I think what they need to look at is, okay, like there are these needs that have been expressed by our customers, and can they be solved by technology? I think that's the first question that needs to be asked, right? Instead of like just blindly going in and investing in like 10 different platforms. The idea is, can it be solved by technology? Do I have technology which has been tested or which has been, let's say, pushed to be able to solve for it, right? Or it has fundamental limitations which cannot be solved for, and then I start looking out for like alternate technology models, right? But I think at the end of the day, it's very simple for all businesses. Start with your customer, be very clear about what the needs are, be very clear about what's driving inefficiency, and then look at technology which can solve for it.
Well, thanks, Gautam. So customer at the center and the needs of the customer. Can technology solve the problem? And if increases efficiency, pass it on to the customer. Now that's a fair assessment. Now let me just move to Monica on that part. And Monica, just to extend that piece, and you have been kind of working with the global players also who have been quite innovative in nature, right? PayPal used to be one of the pioneers in the payment industry way back. And now with 5G, etc., coming in, is it a possibility that industry associations or industry bodies should take a lead and try to build certain experimentation or innovation or kind of come together in some form or the other, rather than each individual small players? Like some fintechs do have the capital and investment and backing, some may not have it. So is there a different model which you can suggest or something in your viewpoint based on your experience?
I think with anything that is disruptive, typically a consortium tends to get established. Maybe in certain other countries it happens slowly, but in India, what we've seen, even with crypto, for example, many crypto players have actually come together to be able to represent their interests. That not only creates the right amount of advocacy for just a topic in particular, but also the ability to be able to come together and solve the challenges, both at the consumer level as well as at the regulatory level. Now, that's really critical for adoption of any technology. And in India, for example, it's a very regulatory driven market. The government is the biggest disruptor of them all, as we've seen in payments over the last 3 years, in particular after demonetization with UPI and now the account aggregator, and then there is going to be OSHAN. So it's going to continue. So the question really is, when we think about a particular technology or we think about a platform that needs to be adopted at large, rather than working at it alone, it's much better to come up with players and to make sure that we are able to create a consortium or a body. And the same goes for the card networks, for example, have always been, the EMDCO has always driven these regularly as a, I would say, a consortium, but maybe a more cohesive unit. Now, what happens is that if you're trying to drive technology at massive scale, and there are going to be open lands that we create, which we call islands, which are similar to what we call a closed loop ecosystem, what that actually does is it actually keeps people out of the system. So essentially, the network effects of what you're trying to create is never given and it never reaches the end consumer because it becomes restricted to that particular island. Now, that's not what we want to do going forward. And if anything that Corona has taught us over the last few months and years has been that we need to be able to work in a distributed environment, but be able to work together. And that togetherness can only come if you're actually the ability to collaborate before, during, and after the scale of a technology. Let me also provide one more example, Asim. I know that you mentioned 5G. Just like mobile has actually completely transformed and leapfrog generations directly into many layers, whether it is edutech, whether it is fintech, or whether it is even government disbursement. Other event, because it's not just about the ability of being able to get faster data, it's actually the ability to be able to go beyond what we have seen a mobile device can do for us. And I think that's going to be really disruptive. We're not talking more about it because, of course, there's a lot of government involvement. But until that technology starts rolling out, I think the adoption of both technology as well as use cases is going to expand massively.
Thanks, Monica. And I can understand the one part which you said, that if you start a massive, on a massive scale, then it kind of moves people out of that whole paradigm. So, and I will just extend that to Ashutosh sir. So I want to understand, because there are one side we have big technology companies, right? They are kind of dominating the market and they are trying to, I won't say monopoly or oligopoly, but there is a trend and they are being innovative because they have the scale, they have the capital to do that part of it, right? And on one side, we have small players who are trying to solve use cases, a customer problem, or certain insights, or try to disrupt something, but they are not able to reach a scale. Because if you take 100 of fintechs, you will see 1 or 2 who have reached their skills and others have still been somewhere, etc. languishing. So from a policy perspective or from the advocacy perspective, what's your viewpoint, how it should be handled and how it should be balanced? Because one side we have big techs, one side we have innovators who want to bring change. Then we have the regulator, we have the government, we have industry body on the platform on which we are talking and discussing this. So in your experience, how do you think, how should we go about this? I know it's a difficult one, but I'm just trying to get this. Yeah.
Yeah. So I'm actually going to have to dig into my archives of my memory of some things which I figured out, because, and I go back to something which is a word which is very popular today called hackathon, right? But I have a problem with the word hackathon. And the problem that I have with the word hackathon is many times these hackathons are created from inside, which means they're a problem, or it's actually, I'll use the word which the phrase which Monica used for blockchain. Many of the hackathons come up with a solution looking for a problem or for a perceived problem. That's one point. The second thing that I find in terms of a hackathon is that it stops with the idea generation or the idea creation, right? Very few of the hackathons that we are doing in our country, right? Of course, things are changing now with the startup hub in METI and all of that which is happening. But I think the biggest problem that we have is we don't look at innovation end to end, which means, are we starting with a problem statement which is owned by someone outside me? So it's not good enough for Ashutosh to sit in his room and say, I think it'll be a great idea to create a fintech solution which addresses the problem of all the cobblers in the country, right? And then I go and create a hackathon around that, and then I figure out there are no cobblers who want to take that solution. Because I never consulted the cobblers whether do they have a problem or am I solving the problem for them. So I think, and that's where the scaling comes into, right? And it goes back, and I go back to something similar that when we did in a previous organization, where we actually got the government, academic institutions, private sector together to identify problems of how can we make the community service centers more profitable. And we discussed with the community service centers what are their issues. We got the problem statements from them, got a bunch of students together into a room for a week to figure out solutions, and then made it move forward. And then you had the government involved. Now, why am I trying to illustrate this? I think this is not a singular problem that can be solved. You have technology which is coming in, but then you also need to have people who are going to use the solution which is built on that technology. Technology on its own is not going to be useful, the way Gautam was saying. It's the solution on top. And that solution needs to address a perceived problem which exists. And there has to be someone who has to help you scale that. In this case, most probably it's a government, right? So I think we have a lot of these things which are coming in place. For example, you do have the RBI's, I've forgotten the name, what they set in place. They put a concept of a sandbox in place, innovation sandbox, right?
Correct.
Now, the point is, you've got an innovation sandbox. Have you got the questions or the problems that that innovation sandbox is trying to address from the market itself? And once that those solutions are coming in place, do we have ownership for someone to actually pick those solutions and at least scale them to a certain level to see if they work? If they don't work, you go back into the innovation sandbox, right? That's, fortunately or unfortunately, the large companies have the wherewithal to do this because of their scale, right? This is what the industry associations, private sector, civil society, regulators, and the large multinationals should come together and do, which is start with the perceived problem, which is an actual problem, and go end to end to make sure that you're actually going to market to test out that, and not just stop at the idea of winning a prize of 10 lakhs or 20 lakhs. Because if you're doing that, you're doing a disfavor to all the intelligence which is gone behind.
Thanks. And that's a fair thing that we don't look innovation from end to end, that part of it. We always kind of do hackathon and those have been the trend, but that's fine. And now coming to the last question and to the panel out here, and let me come back to you, Monica. If you have to do a crystal ball gazing or in the future, one technology or one innovation which you believe is going to transform specifically the payment industry or the digital industry, digital payment industry?
Definitely, it's already here. It's the cloud. And the reason I say this again emphatically is that if the cloud adoption increases and if we are able to get all applications customized so that we don't have to depend on manual deployments, it's not just about reducing the cost. It's also about being able to increase efficiency, and we have to be able to do that. I know there are data guidelines in countries. There is a rise of nationalism. That apart, I think the ability to be able to reach a massive scale with lesser dependence on hardware is something that cannot be accounted for, and we cannot even overestimate what the impact is likely to be. We've already started seeing that happening, but the adoption has to be massive for it to show results.
Okay, Gautam, over to you. What is one thing which you believe is going to change?
Well, I think from my perspective and sitting where I am sitting, the one thing which has the potential to transform how credit is seen in this market is credit on UPI, right? I think we've now crossed that phase where we can say that UPI is ubiquitous, right? The QR codes are everywhere. We have seen a significant penetration of mobile phones. We have seen customers getting used to paying through their mobile phones on QR codes. And we've also seen that credit dissipation, right? In terms of like banks being able to underwrite customers for credit card. That has a limitation, right? That has not been able to spread beyond a certain cohort, right? So to truly democratize credit in this country, to truly actually make it, let's say, in sync with the experience that the customer of today demands, UPI on credit is something which would happen, right? And I think it's going to take this country by storm in the next 5 years.
Thanks, Gautam. And over to you, Ashutosh sir.
So I think, coming from a company which lives and breathes technology and cloud, especially cloud and AI, obviously I completely agree with Monica. And of course, UPI is, we all know, is a big success, this thing. But I'd like to point out one technology which I'm not saying I'm afraid of, but I think we need to get ahead of it very fast in the payment industry. And that's going to be quantum. The reason being, quantum is going to drive computing technology many fold in terms of the speed of it, right? And if you look at it, there is going to be a flip side of that, which means that if once quantum becomes reasonably available in society, the ability to crack encryption will also become reasonably easier, which will hit at the heart of digital payments, because you can then current encryption formulae and the current encryptions will not match up to that, right? Which will go to Gautam's point of trust, which all of us have been talking about. So I think, I'm not talking about quantum in a bad fashion, but I'm saying the power of quantum is going to be so huge. It's going to speed up things. It's going to speed up computing technology. But there is a flip side to that, which if we do not get ahead of right now, will actually spoil a lot of the party that we are all riding right now, where digital commerce is coming into everyone's life. So yes, cloud, AI, UPI are all great things, but quantum, I'm not saying can be a bad beer in the entire thing, but if we don't get ahead of it, we'll have some problems that we need to adjust to.
Sure, thank you. So I think this has been a very interesting discussion. A lot of thought-provoking ideas and concepts have been discussed. A lot of things which are supportive, something neutral, but it's always, when I was hearing all three of you, it's always positive, full of hope. And definitely, I believe going forward, the democratization of credit is something which we are focusing, and payment will play an instrumental role in this. So looking forward to that. Varun, if there are any questions for the panel, then we can take it, or else we can end the discussion.
We have few questions in the chat box.
Okay, good.
If you find them, to be answered, and few are in the question answer round. If you can take some of them.
And let's see. Okay. Yeah, the first question is fintech companies are helping small banks in mobilizing deposit, loan accounts. Yeah, maintenance. Why not large public sector banks? Now, this question I would direct to Ashutosh sir, to you.
Sorry, I didn't get the question.
So fintech companies are helping small banks in mobilizing deposits, loan accounts, maintenance. Why not large public sector banks also?
Why are they not mobilizing?
Yes. Or I would have directed it to Mr. Ajit Pai, but
yes, I think so. Mr. Pai actually in his opening statement did talk about it, right? I think it's it's that perennial problem of NPA versus non-NPA, right? And I'm using those words in a very loose sense. I mean, the fact of the matter is, and I can go back to my experience, right? My son, no credit history, no large assets. They don't want to lend to him, right? But they will lend to me because they know they can catch me. I have a house, I have a car, or whatever it is, right? So I think the issue is again, how supple are you? How does the regulation enable you to actually move ahead? And in this case, it's also your risk appetite. Now, I'm not saying small NBFCs, etc., have more risk appetite, but that's their business legacy, right? Whereas large banks do know that, for them, and I'm not being facetious about it, but for them, large customers are better because that's where their larger interests are. Small people, I mean, it's a question of small accounts, large number of them, or large accounts with, and smaller number of those, right? So large size account. So I guess we need to start relooking at how do we measure success in the financial industry, right? Is it measured by, how much you lend, right? And is it breadth or depth? And we need to look at it from that perspective. It's a policy issue, which I think RBI is looking at, needs to look at, right? Which is why this account aggregator framework has come into picture, so that at least there's some
data points too. Yeah. No, I agree. Some of the banks like Bank of Baroda and others have been kind of setting up lending factory and trying to bring in those kind of insights, etc. So definitely there is that. And I can share my experience. 20 years back, I wanted to take a loan of 2 lakhs to pay my fee in IM. And I was asked by a public sector bank to pay 100% collateral. And I couldn't take the loan because if I had the collateral, I would not have come to you. But that was the way, and I would not have run away also because, but that's the way it used to be. But I think things have changed and it's in the positive direction. Next question to you, Gautam. Is there any support or assistance for Punjab or Chandigarh government for the startups who are in digital neo-banking? I know you have been working in this space, etc. Maybe you have interacted with some of the state governments or have some insights.
Well, I'll be very frank here. If it's asking for any specific support or assistance,
or a startup program by the Punjab government or Neo Bank or digital.
Sorry, I don't think I'll have the details on that question because we are based in Delhi, and I think for all the practical purposes, I think it's the mighty that we work with, and I've seen all the support coming through from them.
So let me just ask another question to you, and this has been that while there have been efforts for the urban population, UPI penetration and fintech penetration continues to be low for the older age groups, even in urban India. Could you help understand how penetration can be increased or how the reach can be increased? Now, this is a very pertinent question.
Yeah, absolutely. And I think this is something which also hits very close to home, right? Because we all have our parents who somehow find it difficult to, let's say, use the digital payment apps, right? Because they are always worried what's going to happen if they click on the button. The way I look at it, it's just the natural progression of any business or the adoption cycle, right? So the customers or the likely customers who are closer to the business or who are closer to the understanding of like how this particular technology can change their lives, I think they are the early adopters, right? And the entire UX that is actually created by the fintechs or like other companies are basically focused on this user group, right? They'll say that, okay, like it's easier for me to onboard a customer who's in this particular age group. This is what the problem statements are, and like this is how I can solve for it. And then once the penetration there has plateaued, that's where you start looking at, okay, what are the other use cases? What are the other customer segments who are ripe for us to start creating like, a user journey for?
So,
And then
just a minute, Gautam. Varun, can you go on mute, please? Varun, can you go on mute? Varun, can you go on mute, please?
Yeah, sorry.
Can you go on mute? Okay, thank you. Yes, Gautam, please.
Yeah, so what I was saying is that like it's not that like this is a segment that has been neglected. I think it's just something which is definitely going to be in focus in some time from now when like fintech start creating solutions which are geared towards the problem that this particular segment faces, right? It's just like a natural progression of business. It's easier to actually onboard with a certain segment of customers with the CAC that we have there. And once like I think there is enough penetration that has happened there, I think it will move on to other customer cohorts as well. So it's not something which is by design. It's just like how businesses tend to progress.
Okay, thanks, Gautam. Yeah, Monica, please. I was coming to you.
I think there's a bigger question here, which is that how are we really addressing the silver economy? The maximum amount of concentration of wealth happens to be in that segment versus all of the fintechs are actually looking at focusing on the millennials and the Gen Z, and of course, and there are now products and including banking products only for Gen Z and even actually teens. The question is the silver economy needs solutions which are primarily the same, but there needs to be a customization and an ability to be able to understand what they are looking for, because it's not just about security, it's the ease of use. For example, one of the very interesting insights from customer research shows that all that the silver economy is looking for is to have customizable fonts on payment apps, because they're not able to actually increase the font and to be able to see what they are doing. Now, it might sound counterintuitive, but this is the basics of product management and design that we should be incorporating, and we should be able to customize. And even sometimes I would rather than talk about hyper localization in terms of a GPS context, I think we should have the ability to hyper localize customer experience for different groups of people, because they're looking for different things. If I don't want to have the ability of a one-click checkout, please don't provide it to me just because you think it's a cool experience and some other segment wants to buy it. So I think those are some nuances specifically for UPI where the industry, the government, and of course operators need to step in to help bring in different segments. Otherwise, we'll continue to stick to 100 million users. We have to grow to 500 million. We have no choice.
Well, sure, I agree with you, Monica, on that part. And I also agree with Gautam, because these are some of the customer segments which have still not been targeted. We always target to the Gen Z, then the millennials, etc. But the money is with these segments, I would say, especially. So again, it's a choice that will.
Ashutosh has all the money.
Exactly, and he has a statement there. So yeah, so thank you. Very, very thanks to all the panelists for sharing your experience. For that, and I hope that the audience would have got what they were looking for in this panel. So thank you all once again. Sincere thanks. Over to you, Varun.
Thank you, Parashar-ji, for nicely conducting the session. I would also like to thank all my panelists, Ajit Pai-ji, Saurabh Mishra-ji, my audiences, sponsors, and all for supporting us in this cause. And with this, we come to an end. Thank you very much. Jai Hind.
Thank you very much.